sessions, daily cycle and session liquidity, and how you can trade them. Okay, so there are three main sessions, which is Asian session, London session and New York session. Okay, Asian session is basically a range in the market. London and Kilzone session, London and New York session usually swap the most liquidity that is present in the market. Okay, so there is some timing written on the screen. You can take a screenshot of it. So ICT have like refined London session to London kill zone, which is 2 a.m. to 5 a.m. and New York kill zone to 7 a.m. to 10 a.m. Okay, so first of all, you wanna time zone and you will have to change this to New York UTC -5. Okay, so when you change this, this is where you will this is what the time you will get. Okay, so for the daily cycle, let me show you something. Let's say you have an Asian session, which usually is opens at 19 till midnight 00. Okay, Asian session usually comes with like a range in the market. Asian session is also known as liquidity. Okay, so this is your Asian low. Okay, this is your Asian high. So after Asian session, there is a Frankfurt Open, which is usually 2 a.m. Central Time. Okay, there's gonna be another video only like based on Frankfurt. So because Frankfurt have many other concepts too, so I cannot explain it in one video. So let's say after Asian session, the daily cycle works like it's gonna swap either Asian high uh, at like 2 a.m. during London kill zone. It's gonna either swap the Asian low or Asian high and then moves towards the opposite direction. Okay, in this scenario, let's go with Asian low. Okay, when London opens, it swaps the liquidity and then it's gonna go towards the Asian high. Okay, now let's say this from here to here was your London kill zone. Okay, after London kill zone, there is New York kill zone, which is 7 to 10. Okay, so what's gonna happen in New York kill zone is the price gonna like reverse a bit and take the high that by London kill zone. Okay, let's say it swept the high, and where is gonna be your the target, the load that was made during London session. Okay, so this is how price delivers every day in the market. So let's say you have Asian session, you have Asian low, you have Asian highs. Okay, in this scenario, price breaks through the Asian highs first. It's gonna go to like Asian lows during the London kill zone, and during New York kill zone, it's gonna like take this New York the London low, and it's got the possible target would be the London high during 2 to 5 a.m. Okay, let me show this to you on chart. This is Euro USD, and these are the two indicators which I use. This is what I will prefer to you. You can take the screenshot of this. Okay, be sure you put the time zone to GMT -5 because you have UTC -5 here, so this is necessary. So show Asian session, this is the timing. London session, this is the timing. New York session, this is the timing. Make sure you change the colors of each of them. This is custom labels. One of them is PDH, means previous day high, which is liquidity obviously. You're gonna take the label to high. Okay, custom range, this is what you're gonna type there. The second custom level is PDL, which is previous day low, which is also liquidity. You're gonna put low. Okay, after this you have 8:30 open. 8:30 open happens during London kill zone. Okay, so let me show you how it works. Take the screenshot of this. Okay, so let's say you have London kill zone, and the 8:30 price open was somewhere over here. Okay, so in order for the price to move towards the upside, it's gonna go below the 8:30 open, and then it's gonna go towards the upside. Okay, in other scenario, let's say you have a selling trend and your 8:30 open was somewhere over here. Okay, so the price is gonna go above, like either it's gonna touch the 8:30 line, or it's gonna go above the 8:30 line, and then it's gonna do. So like if you are looking for sells, look the sells above 8:30 line. If you are looking for buys, look for the 8:30 line. I will show this to you on charts. Like in this scenario, I'm not backtesting it. This is the live chart from today, 1 December. Okay, so let me show you something. This is as simple as it could be. Okay, so you see this candle was 8:30. Watch here. Okay, this whole big momentum candle, because 8:30 open brings the liquidity in the market, like the void in the market. 8:30 is when price clears the major highs or major lows. Let me. So this was the 8:30 time. So this is where the market, the price of this candle. Okay, so with this indicator, it's gonna mark itself. So you don't have to do it manually. Let me mark it for clear. So you see, after this open price moves upward and then exactly taps into the 8:30 line and then moves upward. So this is, it works every day, every pair. Okay, so go to 15-minute. So if you see over here, this was the Asian session which started at 19 to 00. Okay, so during Asian session we had like a range, right? So let me go somewhere over here and to drop the 1 minute time frame. Actually, let me hide this one. And so you see, this was the Asian session high. Okay, when price clears this, you will wait for the market structure shift and fair value gaps. Okay, as I shared my entry criteria, right? So let's scenario, we had this buy side swept over here. Okay, this was the buy side swept, and we did not have a major market structure shift. One was over here. Let me make it market structure shift, and this was the fair value gap, right? Let me change the color. This was the fair value gap. Let's say you took a loss over here. Okay, now after this price cleared this buy side liquidity at this point, you can, okay, so after this trade, what you would be waiting for is a market structure shift. You had a market structure shift over here. Okay, you had a this was a market structure shift. Okay, what you're gonna wait for is another fair value gap to be appeared on the chart so you can trade it. So this was the fair value gap. Your entry would be, now there are multiple types to enter this trade. Now either you're gonna take the Fibonacci tool from the top to the bottom. Okay, now you enter on 0.50 level. If your fair value gap is like this big, so you can take the entry on 0.50 level, and your stop loss gonna be go above somewhere over here. Okay, so in this scenario, there is another thing you can do is you're gonna take the the only fair value gap candle. Okay, so your entry is gonna go at this 0.50 level of the fair value gap candle. Okay, so this is where my entry would be, and my stop loss is gonna be, if you go with the fair value gap candle, so somewhere around up there. Okay, so now you're gonna ask me where should be my first target. Your first target is always gonna be the Asian session. If we swept the Asian low, your first target would be Asian high. If we swept the Asian high, your first target is gonna be the Asian low. Okay, now in this scenario, let's say you took off the 70% partials from this trade, and you hold this trade until you see market. Okay, now after this, let me close the back testing. Let me clear this. Okay, now you had the sell. Okay, so this was the last low that price made. So as I said in Telegram, every highs and every lows have liquidity above and below them, right? So this was the last low that price in this scenario made. So this is gonna be your full take profit at this point. Okay, during you will be doing is you're gonna go to now watch this. You have Asian low. Okay, as I said in the as I described in the daily cycle, the Asian highs are swept over here. The Asian, now what you're gonna do, you're gonna wait for the market structure shift again, and wait for the fair value gap to be appeared, so you can trade the fair value gap, and your target is gonna be the London session high, or the previous day low, or previous day highs, or any high that was made during the market. So at this particular time we have two, right? One of them is that the Asian low was swept, and one of them is this liquidity was swept. Okay, so if you move to like 15-minute, we kind of have a fair value gap somewhere over here. I saw it on, like, when I was trading it. So let's say you waited for this fair value gap, and you are constantly waiting over here for a market structure shift. So where do you see the market structure shift? Now one of the guy in the Telegram was confused shift, right? So there are multiple types of people or mentors that like market structure shift varies of how they understand it. So some of them is gonna take this as a market structure shift. Let me this as the market structure shift. So some of them is gonna take this as a market structure shift, or some of them is gonna take this you see this bearish candle in after this bullish candle. Okay, because let's say price made lower low, lower high, lower low, lower high, lower low, and lower high, and after that it like fails to continue moving to make the new low. So what happened over here, like failed to make the low, and it the next candle break the candle of the lower high. So this is gonna be another market structure shift. So I hope this clears how you take the market structure shift. If you don't understand, I will make another, like a single particular video. So after this market structure shift, what do you see? Take the Fibonacci tool, take it from the bottom. Now as Christopher or ICT shares, ICT in order to take the entry, ICT Fibonacci tool from body to body, like you use Fibonacci from this week to week, this week ICT use it from this body to this body of the candle. Okay, so after we have a fair value gap below the 0.50 level. Okay, as I shared in the last night video down. So this was the fair value gap, like a clean fair value gap that you can trade off. Now multiple types to enter. ICT suggests if you don't have fair value gaps in the entry, okay, you can trade this 0.79 is and 0.708 level. This is my Fibonacci levels. You can take screenshot. So ICD suggests if you don't have fair value gaps and you have market structure shift, you can trade this OTE. This 0.79 to 0.708 level is known as OTE, optimal trade entry level. Okay, so this is optimal trade entry level. So if there was not any fair value gap present at this point, you can take the entry at 0.79. So many other mentors have changed this name and call it CLS entry. So as you may have seen it in my previous stories. So this is your entry gonna be, and this, as I said, if your fair value gap or your stop loss is going too big, so you can refine it to the bottom of the wick of the candle that have fair value gap in it. So as I said, where is your first target gonna be? The London session high. This was a 14-hour trade. So this is the only trade you can take, and you can like move off the market just in one trade. Do remember we have one sell over here, we have one sell over. That was a -1 hour, that was 7 to 8 hour trade. And after this 8-hour trade, you have this 14-hour trade. And after this 14-hour trade, let me show you something more. This video is going to be very wide. Okay, so let me go through somewhere over here. Let me hide this. Is this so this is where you see the market structure shift. Okay, this was the first this was the raid after the London session highs swept. Okay, this was the first market structure shift. It was actually not a market structure shift, but it was a equal lows. So if you see equal lows in place of market structure shift, you can take it as a market structure shift, because this is liquidity and price is gonna go to clear it. Okay, so this is your fair value gap. So if I didn't teach about BPR. So what BPR actually is, when you have fair value gap on buy side, on sell side, and as on the same time you have fair value gap on the buy side as well. So in this particular scenario, so like this, I am gonna refine it to somewhere over here, because you see you have the actually my bad, I'm gonna take it from here, because this was the buy side candle. Okay, this was the buy side fair value gap this week to this week. Okay, this was the sell side fair value gap from this week to this week. So the area between these two gaps is known as BPR, balanced price range. BPR have more conflicts than fair value gap. If you see BPR in place of fair value gap, you can trade double the risk. Okay, so this is where your entry gonna be, this is where your stop loss would be, this high. Let's say it goes to like let me do it. It went for almost 2.80, let's say 2.5 hour. Okay, now either some of you would have gone with break even, or let's say you took a loss over here after 8 hour, after 14 hour and one loss, we had another loss over here. Now one of the guy was confused at this breakout structure. I don't know, but if you go to like lower time frames, even lower than 1 minute, like 30-second time frame, this point was a breakout structure. But for me, is on 1 minute time frame, this is not a breakout structure. If you consider this as a breakout structure, this could have been the breakout structure as well, because it swept the liquidity and this is the breakout structure. But no, this is not the breakout structure. Breakout structure should be as clear as this. Okay, so buy side swept. Okay, and we have the liquidity, we have the market structure shift. Okay, after this market structure shift, what do you wanna wait for? We have to wait for the fair value gap. So this was, okay, in the market, the lower wick of the previous candle, the higher wick of the next candle, the gap between this is called fair value gap. Do remember, if you I have a gap over here, I could drag it there and this would be called as BPR, or balance price range. So this is where my short entry would be. And now it depends on you. If you have like tight spreads, this would have been like a clear entry. That won't be a problem if you have like tight spreads. If you manage your spreads on your stop losses, let's say you go, okay, where should be your target? You want to find a low that had liquidity. So this was the last equal lows that I see. You see that we made on like 1 minute time frame. This was the last equal lows that we made at this time. So this is where our target should be. Like not the target, but you would have taken like 70% off at this point. All right. So after this, we have this liquidity swept. What we gonna do after this liquidity swept? This was a liquidity swept, right? So this is where I shared this entry on Telegram. You may have known. So this is fair value gap, right? So if you see and zoom in closely, you have the gap candle on the left hand side of it. So it automatically becomes the BPR, balance price range. You can write it somewhere, or I will share the abbreviations on in the Telegram. So this was your, I guess, fifth entry. This was your stop loss, and where is your target gonna be? This high, because this high have liquidity above them. We will be, as we know, we are in like a selling trend. So this high was the liquidity. This was 3R. Okay, we will continue at last. Okay, after this we have this high swept, we have this fair value gap with a market structure shift. Now either you're gonna take this market structure shift, or we will take this as a market structure shift. We have absolutely no problems, because this was valid and this was valid too. So this was the trade that I have shared on my in my Telegram too. So where is gonna your target gonna be? This is how easy it is to ping pong your trades. You see, we have a sell, we have a buy, we have a sell, and just right after that sell, we have this bullish fair value gap. Okay, so you see, right after this sell, this is our fair value bullish fair value gap. Your stop loss is gonna be go below this low, and your target is gonna go below. Like for me, I would have traded this, because this is 10R and I usually aim for 10R only. So after 10R you can do this, or you can go above as you want. So I didn't took this trade, I was not sure on this, but this on the charts as well. So this is the all from the day. So I can show you some more entries if you want. So this is where the fair value gaps were, right? So if you drag it to somewhere over here, you are not gonna directly trade put the entry over here. You will be waiting for the lower time frame confluence. So this was your fair value gap, right? On after the main fair value gap, you have another fair value gap, and this fair value gap broke the structure over here. So remember, we have the first fair value gap, we have the market structure shift, we have the second fair value gap, and we have the some sort of inducement. I don't usually trade inducement, but this is what where inducement is. So after this, your stop loss is gonna be above the fair value gap candle, right? It's gonna be your targets. This low, this was the last low that price made. Okay, it exactly tags into it and then booms. And now this could have been your another entry, or you can have another trade at this point because price exactly tags into it and drops. Now calculate these. How many are could we have got? 5.7, like take it as a 5. Okay, we have a 5, we have 12, we have 8, we have 3, we have 6 or 7. Okay, we have 14 hours. Now do remember something very important. Just in the morning I shared that this was my ideal price. I was waiting for this to be ready because if you see the last day video I shared on my Telegram group, this was the sell side liquidity that we cleared tomorrow, and this was the buy entry. So if you had this buy is holding from tomorrow, now I don't know, it's gone. The entry was on 1 minute time frames, so it would have been very low stop loss. So let's say you have a buy somewhere over here, and your target would have been this buy side liquidity. As I said, every high and every low have liquidity above them. Now there is like some of the guy was asking that if what is valid buy side or valid sell side. There is not any concept at ICD dot that there is invalid buy side or invalid sell side, because this was the high, this was the buy side, so this was the low. Now this low currently is the uh, liquidity below it. So after this buy side run, I am waiting for the price to move below and go below this. So if it's not gonna do this will go to somewhere above the previous highs, and it's gonna raid the previous high, and it's gonna drop. And this was the high, oh this was the low. Maybe it could be go below this and then go back towards in the uptrend. Okay, so you see how price moves. Like we took the sell side liquidity, we get in. Like the first one was over here during the New York session. I actually had this entry and I shared this whole breakdown in the video tomorrow, at yesterday's videos. So this was the buy side liquidity, we cleared it. We had 1 minute entry, this was our sell side liquidity, this was our target. After this swept of sell side liquidity, what's going to be our target? This buy side liquidity. Now after this buy side liquidity, what's going to be our target? Either this low, or if this low is going to be our target only if we find it sell entries at this particular areas. So let me share one. So this was the entry that we took, 14-hour entry that we took. Let me read this one. This was the entry that we took on during the London session after the London kill zone swept the Asian lows and this previous liquidity, right? So this is gonna be your first take profit and your full take profit, which was 22 hour. So if you go to now lower time frame, you have you had 8 hour over here, you had 3 losses. No, you have 2 losses. Okay, so one was over here, one was over here. So let's say this is this as a 20 hour, because you minus the two losses, you have 20 hour. you have 6 hour, you have 3 hour, you have 12, and there is 8 hour, and this is 5.75. so I hope this clears your perspective of how I trade and how you can ping pong this market. This is a very wide ass video and I will have to take a time to send it. Video is gonna be about fair. There are two types of fair value gaps. One of them is bullish fair value gap, and one of them is bearish fair value gap. So bullish fair value gap occurs when price moves with a bullish momentum, like there are multiple candles only of buys. So let me show you drawing I made for it. So let's say we have a bullish momentum in the market, right? So you have 3 or 4 like major multiple candles in a similar direction, like for this instance, let's say we have a bullish momentum, right? So you got multiple candles, so one of them gonna have a gap, the gap between it. So you're gonna mark the gap with the high of the wick of previous candle and the low of the wick of the next candle. So the gap which is between this area is called fair value gap. So similar is for the bearish scenario. So uh, this was the wick after the momentum candle, so we are gonna refine it to above the wick. So now the gap between this is now refers to fair value gaps. Let me show you fair value gap on live chart. So this is gold on daily time frame. So as we are moving in a downward direction, so we will only focus on the bearish fair value gaps in the market, right? So in this scenario, where are you seeing the fair value gaps? So for me, this and like these two candles are like bigger than the normal candles right here, right? So you're gonna mark it from the wick of the previous candle and the wick of the next candle, right? So the gap between this is called fair value gap. If you zoom out on chart, you will find them everywhere on the charts, and this is where the price instead of rebalancing itself, it moves in one direction, right? So price have to rebalance the gap either in future or like anytime. It will come back to the gap and then drop, either like drop or break through it. But it is like for sure 100% that the market is gonna be inside this fair value gap in future, either in the next day or in a month after, right? So this was the fair value gap, bearish fair value gap, right? So there are multiple bullish fair value gap in this trend. Let's see this one. We have a multiple bias candle only, right? So this was the bullish fair value gap. So you may ask me that why we did not took a buy over here. So as you know, we are moving in a downward trend, so the buys are not the option over here. We have these selling, we have the bearish fair value gap over here. So what we are focusing on is we look for sells in a bearish and we look for buys in a bullish trend, right? So over here we have a we have a bearish fair value gap, so we are gonna take the sells from here. Now obviously we are not gonna take a sell from here and stop loss gonna be around up here, so we will define it to lower time frames. And this is just like with fair value gaps you can know the direction of the price. You can like guess the price where it's gonna head, go ahead for in future. So in this scenario, let's say this one was the bullish fair value gap, uh, the last week and the high of the week. So this was the fair value gap, and price trades into it and then moves upward. So the question arises that why did I took this bullish fair value gap over here. So if you see, the price was moving in a downward direction for a long time, and this was the last high that price made. All right, so when price break through it, so it's mean the trend is gonna be change. So this is what market structure shift is. Or if you have been through smart money concepts, this is what called change of character, right? So after this change of character, price moved towards the upside, and we have either fair value gaps like this. We have a huge momentum towards the upside, and within the momentum, uh, 3 to 4 multiple bullish candles. So one of them have the gap between it. So what we're gonna do is we're gonna mark the gap, and we will wait for the price to tax the gap, and then go to like lower time frames, 1 minute or 15 minutes, to either find the entries, and like you can find entries within the fair value gaps, or this can be your target. Let me show you. Like in this scenario, this was a the bearish fair value gap, right? So when price tags into it, and when price was moving upward, this was bullish. Let me change the color. So this was the last bullish. So when price tags into it, you can drop to lower time frames like 1 minute time frame, and you took an entry. The entry criteria will be shared in further videos, right? So let's say you took an entry on 1 minute time frame over here. So what will you target for? Either this low or the fair value gap, uh, because sometimes, where's the polygon? Because sometimes price tags into the fair value gap and then moves towards the opposite direction. So that is the reason why we took our take profit on the fair value gaps. So I hope this clears your mind with fair value gaps. Let me show you some more examples. This was the fair value gap, price exactly tags into it. Okay, this was the fair value gap, price tags into it. This was the fair value gap. Let me mark it. From the last week to the week, the upper week of the next candle, right? So this was the fair value gap. Price here breaks the low, tags into it, and then again drop over here. So if you go to like any time frame, you will find fair value gaps. Like in this instance, this is daily time frame, right? So if I go to 1 minute, this is fair value gap, price tags into it, and then moves towards the opposite direction, right? This was fair value gap, this was fair value gap, price tags into it, and then moves towards the opposite direction. This was the raid. I will share what trade is in the future videos, right? So this was the rate. Price breaks the structure over here. We have the fair value gap, price tags into it, and then we drop. So this is what my potential buy or sell model is. So this was a potential entry for me, but I didn't took it. I was on Euro USD. So this is what fair value gap is. This was fair value gap, price tags into it, and then drops. You can find it literally everywhere on the charts. So if you have any questions about fair value gaps, you can contact me in the group, or either in private. We can do like one-on-one Zoom sessions, or if majority of you did not get what fair value gap is, so we can do like a public fair value gap Zoom session. How to pass your funded account, and it is our third lesson. So for this I have chosen a day where we could have like multiple losses with our entry model, the session cycle. Okay, so I will show you how you can cope with losses on your funded accounts with our model. So let's start. This was your Asian high. Okay, this was your Asian low. Now you will get it when I go on lower time frame, right? So this was your Asian high, right? So what you would be waiting for with our entry model is either the swept of Asian high or the swept of Asian low. So for this day, what do we had? This is the reason why I mark this, because whenever I do backtesting with this indicator, it shows something like this. I don't know why, but let's close it. So this was your Asian high. Okay, what you would be waiting for is the swept of the Asian high and market structure shift and fair value gap entries. You had the swept, you had like impulsive move upside. Now what would you be waiting for in this case is this last break of structure. Okay, now we have a fair value gap as well, but we don't have the uh, break market structure shift. So what happens over here is, if we look closely, you have the fair value gap but with a BPR. Although it was a small BPR, but let's stick to our rules. Okay, so this was your BPR. So where would your entry gonna be? Above, below the fair, below below the BPR, and your stop loss is gonna be above the candle value gap. And where is your target gonna be? The first target would be the 5 hour, and the second target would be the Asian low. Now in this particular scenario, what happens? Price perfectly tags in. Okay, now you are running in profit. I guess this was 1 hour, or I don't know, more than one. We had like multiple rejections from our balance price range, right? So what happens after that is, boom, your stop loss hit. Okay, so let me type it somewhere. For the day on our funded account, we are minus 1%. Okay, let me do it bigger. So we are minus 1 hour on our funded account. Okay, so what happens after that? Now after this loss, this high is a buy side liquidity for you, because this everything in this scenario was valid and you still lost a trade. So what you would be waiting for is the swept of this high. Okay, because now after this fair value gap and this like this BPR is invalid now, because now this fair value gap does not have any market structure in this scenario. So this is not valid, and this high is a buy side liquidity for us now. Now let's say some of you get FOMO over here, right? So you think that price took you out and it's like moving downwards. So but in this scenario, you had this equal lows that price is trying to sweep and then move towards the buy side liquidity, right? So although there was a BPR too, like this, we had a BPR too, but as we know, this was our buy side liquidity. So let's take a trade. This was clearly invalid trade, but still, let's say we took a trade. Our first target would be the 5 hour, let's say. It takes us in here and it drops like, oh well, it actually drops for a 5 hour. Okay, so watch this. This was a 5 hour trade. Now let's say we took a loss over here. Let's be honest with our entry model. Although this was a profitable trade, but let's say you had a loss over here. Okay, we are minus 2% on our funded account. Now you would be waiting for this buy side liquidity to be swept. Now let me make this one. This was our buy side liquidity. Okay, now what would you be waiting for this swept of this liquidity and market structure shift? Now in this scenario we don't have any market structure shift. Now watch this. This whole move does not comes with any fair value gaps or BPR in it, so we will like completely ignore it. This is usually known as build up, means the build up of liquidity, the trend and liquidity. If you see it on like more lower time frames like 30 seconds, so it happens after more buy side liquidities. We set more buy side liquidity and we are still waiting for our. Now let me show you something. What is our bias? After Asian session we are continuously swapping the buy side liquidity, but we are building the sell side liquidities, and we still have the Asian session low to our here. So what is our bias? To trade inside the Asian session zone. Okay, to trade inside this. We are continuously moving towards the upside and we are continuously clearing the buy side liquidities. So what we are left with the sell side liquidities. Now as I said, there is sell side liquidity below this low, like every low holds the sell side liquidity. So what happens over here is you had another impulsive move towards the upside. Okay, now this is where you had your market structure shift, and this is where you had your fair value gap. Although this was not only a fair value gap, we had another small balance price range inside this. How does your entry gonna look like this? Where would be your target? Would be below this low. This is 4.770. So let's say this is your target 5 hour. Okay, let me move this aside. You got tagged inside the trade. Price moves for 3 hour almost, and after that you had another loss, 3 losses consecutive. Okay, although this was not a loss if you stick with your rules and took your like 50 or 60% of your trade at 5 hour. Okay, this is the reason why I told you guys to stick with 5 hour first and then move to like 10 hour, because you once you get experience with the with this session cycle model, you will be getting more hour risk to rewards. So in this scenario, let's say we have 3 hour in negative for the day. So this was a loss too. Now we swap this liquidity. As I told you, if you took a loss on this fair value gap, okay, now this high is invalid for you because this liquidity arises. Now there could be some point like maybe price is clearing this sell side liquidity and this was the fair value gap, price tags into it and then moves to clear the buy side liquidity. You always have to like clarify your losses, because this was a valid loss and you can like see why would you lose a trade over here, so you can give a reason to yourself. So this was a buy side liquidity. Again we swept it. Okay, after the swept, but where was the last low? This. Okay, let me delete this. Okay, this was the last low and we had our market structure. I always put the wrong lines on the wrong time. So this was our market structure shift. Okay, this was the buy side liquidity swept. Now where would your entry gonna be? Fair value gap, like this. Okay, now let me show you something. Although this entry was like based on this order breaker block, right? So I will tell you what breaker block is for the beginners. Let's say market is going in an upward direction. Okay, now as this was following the order flow or the market structure, let's say there was order block, price tags into it, moves upward. There was order block, price tags into it, moves upward. Now at at this high, okay, or this low, there was a order block somewhere over here. Okay, now instead of price mitigating it and then moving upward, let's say price mitigating it and then moving upward, what happens is price breaks through this order block. Although this was a valid order block, but price breaks through it. Okay, now this is now called breaker block. Breaker block is always valid, is only valid if the move that break the this particular low, right? So this move is only on fair value gaps. Let me show you on live charts. Okay, like this was the breaker block and the smart money traders would like put a buyer somewhere over here, right? So the move that cleared this order block, right? So this was the candle on with a fair value gap inside it. Okay, so this is what your breaker block is. I will do like a video on this if you don't guys if you guys don't understand about it. Okay, now what I would be waiting for is for the price to get inside this breaker block. Your stop loss is gonna be above this. Do remember, smart money traders do trade the breaker block as well, but like not all of them, but some of them do. So where is their stop loss gonna be? Because they have a very refined stop loss, so their stop loss is gonna be somewhere over here. Okay, so now but where our stop loss is gonna be above the fair value gap candle as our entry rule, right? So where would your first target would be? Let me show you. 5 hour. This was 5 hour. Okay, your next target would be the Asian session low. This was your Asian session low. Now what happens over here is price tags into it. Okay, it wicked the smart money traders. Okay, and after that it starts to drop. Okay, this is your first partial point, the 5 hour. Okay, after this whole trade is like let's say 11 hour, although it's 12, and we hit do I guess the full take profit. Yes, let me see if this was London session. 1 second guys. Okay, so this was your trade inside the London session after it swept the Asian sessions high. Okay, we had our first loss somewhere over here, we had our second loss, we had our third loss. Now this was the total 3 are in negative. This trade puts up. Now let's say you cleared the 3R and you are in positive 5%, you are left with 3%. How would you do the left of the 3%? Now delete everything. We have the Asian sessions high, swept. The Asian sessions low, swept. What is left somewhere over here? The London sessions low is also swept over here. What is left? The London sessions high. Now what is your bias over here? The video got stopped, I don't know why, in the middle. Okay, so what is your bias for the day? As I said in the previous ones, the Asian sessions low, swept. The Asian sessions high, swept. The London sessions low, swept. Now what are we left with? The London sessions high over here. Now this is our target. Now where will we find our entry after the swept of London sessions low? Right, this was the basic rule that I shared on the first video. So what you would be doing over here is, after the rate on 1 minute of London sessions low, you would be waiting for 1 minute market structure shift after the rate. Now watch this. We had the low, we had the high, lower low, higher high. This was the swept, I guess. Okay, after this we had the higher high, lower high, higher high, lower high, higher high, lower high, and after this let's take it from there. It broke every lows, higher lows over here, and it created this lower low. And after this, what do you have? Let me move it right this. Okay, after this you had this lower low, lower high, lower low. This was the lower high and this was the lower low. Okay, after this was a market structure shift. Let me show you after on the charts. Let me zoom it in. Okay, so what's this? This was the last low that price made. Okay, it was swept over here, and this was the last highs that price made. Okay, it also got swept over here. Although this was a liquidity, the buy side liquidity on 30-second time frame, but are we focusing on over here the 1 minute time frame? After the market structure shift, always the wrong line. After the market structure shift, what you would be waiting for is a fair value gap. What is this? A fair value gap. Now what this stop loss is like 3.7 pips, so you are not gonna do that. Your stop loss would be below the fair value gap candle's body. Now as I told you, what is our bias in this scenario? We are bullish. The reason for being bullish, because we have London sessions high still pending to be taken out. I guess I deleted that. For the day we was plus 5R. Okay, we had 3 losses. We had the 12-hour trade, and although you could have passed the trade on you could have passed the funded account on this trade that we took over here, but let's say you like closed your the trade partial solo. Okay, now after this we got tagged inside the trade and let it play out. Now this is how you could leverage your trades. Okay, this was a topic too. Although this is not a good idea to do on funded account, you can do this on your live capital, but with a lower risk, right? So this is not ideal for a funded account, to leverage your trades or layer your trades. This was a fair value gap. Let me change the color. This was a fair value gap. This was the last low that price made. The this the stop loss is very wide, right? So this is where your stop loss gonna be. Watch this. How perfectly price tags into it. This is your stop loss. Now where should your target for this trade be? The same London session high, or you can now watch this. If you are layering or leveraging your trades like this, okay, now instead of taking partials from your first trade, you can close this second trade over here on this high, right? So what I would be doing over here is, this was the last high that like the valid high on, this could be on 5 minute. Okay, so this was the last valid high on 5 minute, so I would take like 50% off over here. Okay, now instead of closing my main trades partial, I would close this trade, like this trade fully over here on this high. Okay, so I will let the main trade run to our main target, and that target was the London sessions high. Okay, now this was our 10. Let's see if it get tags in. Fair value gap, it was valid, but let's say you did not took it, or this is an important topic, so I should took it, because you are layering your trades. Where is your target? The same. Now if you want, you can target the next high or the same high. Let's say you target the next highs. Okay, now you can see you can have multiple trades. This was fair value gap, this was fair value gap. There is not any clear one over here. Okay, you got two more trades over here as well. Now your 10-hour trade, take profits hit somewhere over here. The second 13-hour take profit hit. Now to remember, we have our the main trade running too. It was 16-hour, and that was a take profit too, I guess. Let me go to a higher time frame, like 5 minute. 1 second, the indicator is loading. Boom. Now watch this. 5 hour. Okay, 16, 13 and 10. Now you can have like some of the guy in the mentorship group was saying that he only wants to target 10% a month. This is so easy. These mentors, like, I don't want to name him, but yet these mentors have made this concept so easy by changing its name, only to get you in their mentorships, only to get you in their mentorship. Now even if you had this increase 50% off somewhere over here, and the main target would be the London sessions high. Watch this. 1 second, let the indicator load. actually I'm on the room, so my Wi-Fi is kind of slow. So what's this? 19, almost 20. Okay, 20, 16. The 12-hour trade -3. So even on losing days, like you had 3 consecutive losses before your wins. This is where your psychology plays a main role. Now I was struggling with it too, like I would do the revenge trading and stuff. So this is very important to control your psychology, and for that what you could do is to fund a live account with $50. Do you remember demo account would make your would let you know how your strategy works, but you don't have your real emotions in that demo account, right? So for that reason you could use a $50 account, the $50 live account. Either use a cent account or a standard account. Okay, in cent account you can have you can say a bigger capital. If you search about cent account you will get to know about it. Xness or Robo Forex provides it. So trade on that $50 and try to grow it as much as you can by risking only 1% per trade. I know it would be low, very low on that $50 account, right? So but you have to build your psychology. You are not looking for your profits, you are looking for your psychology. Once you get your trading trade numbers number one, once you get your trading strategy right, and number two is your psychology, you can easily pass funded accounts in one day. Not even one day, in one session, in London session or in New York session, right? So this is how it is easy. uh, if you guys have any questions you can ask me. Now I will upload the video right now. Video is gonna be about GBP USD 5 December and Euro USD 31st October, or you can say when this model usually doesn't work like how it works on good days. So the only reason that I trade or I teach only this model for now is one of the reason is because it have a higher win rate than others, and it have like higher risk risk to rewards. For me, I have personally backtested this model for 6 to 7 months, and I have proven track record of it as well. So what basically happens is you guys like forget days like this where this model works like perfectly. Like you see, this was the Asian low and it swept in during the London kill zone, and after that on the next day you have this Asian low that was swept before the London kill zone, and after that during the London kill zone uh, in previous liquidities as well. After London kill zone, and we then again dropped and cleared the London lows. So you guys forget days like this and you are only focusing on days like this, even though days like this still have opportunities for you to trade. So let's go over it. So 5 December. Okay, so price did not look out the Asian highs. Okay, this is where the Asian lows were swept. Okay, now do me a favor and please tell me, where do you see a market structure shift or for your entries? Because from this to this range. I Okay, and after that there was this one. After this, like a huge consolidation for a time, I see this one. Okay, let's say you took a loss on this trade. You are -1 for the day. Okay, and after that this was uh, another move towards the upside, and there was another like a tiny fair value gap somewhere here. But in some of the previous video I have told you, like if you followed all your rules and you still got stopped out, that that low would have been a buy sell side liquidity, and you would wait for that particular highs or lows to be swept, and then you will wait for your entry again. Okay, so this was your first loss, -1 hour for the day. Okay, and after that, where do you see another entry? Pause the video and do let me know. The only one I can see is this as a market structure shift, and this is your fair value gap, right? And price exactly tags into it. Now on your broker if they took you in or not. We have our stop loss below our fair value gap candle. Where is your target? Your target would be the 5 hour. Okay, and your next target would be the 10 hour, right? And the last would have been like the 20% of your trade would be running break even till this high. Okay, now let's see where the price went. Price went for 18 hour. So let's say you took 10 hour from over here. This was the bad day, as I told you, right? Like the price moved in a sell side direction only, sell side trend, right? So after this 10 hour and -1, you are up 9% for the and uh, NY kill zone. We was waiting for the London highs or the Asian highs to be swept, right? Because we swept the Asian lows, we swept the London lows, but it's left over here for us to trade nothing. This is where we was waiting for our entries potential. Our was we were only trading euro. We don't even trade GBP USD. In the group I have seen like every one of you trading Euro USD, and no one is focusing on other pairs. Even though I have mentioned on that the rules that I have shared or pinned in that group. So I see no entries after that, and this was the after the kill zone. Okay, video got stopped. So you are plus 9% for the day, and you took 3 other losses, right? This was not a case here, but let's say your psychology or you get FOMO over here as well. So you get 3 losses for the, you are still up 5% for the day. This is what I am telling you. Because if you trade the pure ICT, there are many concepts that you will be messed up. The only reason why I'm not teaching that 5 rule, because it has like a very low risk to reward, like 1:4, 1:5, and that too after getting like multiple losses. This is the only reason why I'm teaching this, because this model for me, I have back tested it this like for 6 months, and I get like better risk to reward, better win rate, and I have passed like multiple 100Ks or 300Ks challenges. So this is the by far the best for me. Now let me show you another thing. this was the bad day, right? And if you go to one extra time frame, let me delete. That was on somewhere here, 5th December. So if you were to backtest the 6th December, what do we see on 6th of the December? So this was your Asian price gets close to it, but took out during the London kill zone. So during this swept over here. After this swept, I see no entries at here. This could have been your entry, but if you take this Fibonacci that is above the 0.50, so let's say you get FOMO and you have -1% for the day. Okay, and this was the BPR, our possible entry that doesn't require a market structure shift. So this could have been your stop loss. I'm sorry. This could have been your stop loss, and your first target would be the 5 hour. Okay, you had another loss. That this was the fair value gap, but if you look closely, you have, I guess, PBR. Yes. So you are in -2 trades if you followed all your rules, right? And if you get FOMO, this was another loss that you should have, that you could have this one. So after multiple sweats, let's go over our. This was your another swap on 1 minute, and this was the value gap. This was the market structure shift, right? You swept the Asian lows, you swept all these highs, you have the fair value gap, you have the market structure shift. What else do you need? Your entry, right? So this is your stop loss, this is your entry. Your first target would be the 5 hour, your second target would be the 10 hour. So 8 or 10. So you are like 80% of your trade, right? The only 20% of your trade would have been like at this point on break even, and your take profit would be the Asian highs for the 20% of your trade. So we are 10% and -3. Although this was 2, but let's say -3. So you are 7% up for the day. Now like we did not take out the Asian highs, right? So we have no entries at this particular rejection. After that, we swept the Asian lows, and during this Asian lows being swept, there was this fair value gap, there was this fair value gap, but there was no mitigation, means no entry, right? And let's say you missed all this the momentum move, and after that you have the Asian. Now the one thing, you only need your entries either on the bottom or on the top. You are not looking for entries in the middle of the move, because that's where your stop loss will be. Like all the time you will hit your stop loss. You only need the bottoms of like the potential moves. So you swap this the London kill zone highs, and this was the fair value gap. This was your market structure shift, and you have your entry. Your stop loss would be the candle high, your target. Now watch this. You have set the session. Now where should your target would be? This, the low. Your first target would be the 5 hour. Your second target would be 10 hour, and the last target would be the swept of the session. So you are 10 and minus 3 7, and this is 14. And after that, we during the London kill zone we swept this low at here, and let's say you took a loss over here. This was a favorable gap, and although it was valid, we have a market structure shift, we have a fair value gap, we had the liquidity hunt, but still we lost a trade, right? So there was no entry on this BPR, but we have this upward move and then a correction, and then again the upward move with a fair value gap. This could have been your entry. From the fair value gap to the stop loss would be the candle of the fair value gap. Now where should you target? Because the London highs are swept, and the only target was left for the day was the New York kill zone. So this is your New York kill zone high, 18%. So if you forget days like this, where you can, don't forget, this is the next day of that day where the price move like in a same direction. This is just the next day. I am not backtesting it from like a previous anything like that. So if you get a bad day, just don't mess up your psychology. Just wait for the market to be like back how it follows your session cycle. Just don't mess up your psychology. You will get days like this as well, where you can recover all of the losses that you took on these days. Although this was a positive day for us, rules, the only way you can get positive in these days as well is to back test, and like find days like this and back test it on every pair. So you have like the 10-hour trade, the 14-hour trade, and the 18-hour trade, and there was no entry on this move, and we also don't trade the New York after the New York kill zone, right? So let's go again, and let me delete this. We back tested this day, and I will show you this day as well. This is just, I'm showing you the from the same month of December. Now what do you have over here? You just need to switch your pairs. If you don't find any entries on your USD, change it and use GBP USD or USRD or SPX or odd USD. So this was a liquidity hunt, right? This was the market structure shift. This was the fair value gap at the extreme. This is your entry. This is your entry. Your stop loss would be below the fair value gap candle. Your first target would be 5 hour, and that is here. And if you had your entry on like a break even after the 5 hour, now this would have been taking you out on break even, and the price moved like till the Asian highs. Well, this could have been your target as well, but let's say the trade took you out on 5 hour. Okay, so after that the Asian highs that was swept. What do you see after the swept? The market structure shift with a fair value gap. Now you see how choppy is this in this range. Now if you were to place your stop loss on this candle, this would have been a valid loss. But but I would have done if I were to trade this, because this was the clean price action, right? You have the clean lower low, and then lower high, then lower low, then higher high, then higher low, right? But in this scenario, what do you see? A bearish candle, a bullish candle, bullish candle, bearish candle, bullish candle, like a choppy range. So in this scenario, like at the top highs or the top of the lows, it totally depends on you. Like if you had your stop loss in somewhere over here and you still lost the trade, so this would have been a valid loss, so that's nothing to worry about. The target would have been the London session lows, and we did not took that out. After that, what do we see? Let's go. We swept the London kill zone highs. There was no fair value gap over here. We have this BPR. Do we need a market structure shift for BPR? No. What's this? Your entry, your stop loss would be above the BPR candle. Where should your target would be? The 5R, okay, and the 10R. How much is that 10R? And the 20% of your trade, the London kill zone low, the London kill zone lows. So how much we are up for the day? +5, and let's say you took this as a loss. 4 and the 10, 14. So we are 14% up for the day. Now this is the swept of the high that swept the London kill zone, and your same the target would have been the same, the London session lows. So this is choppy as there was no fair value gaps over here. So now there is this fair value gap, and if you took this Fibonacci tool, is this inside the 0.50? No, there is no fair value gap above the 0.50. There is this. If you took it, let's see, this is inside the zone, I guess. Yes, so this is your losing trade. So this is how you should have done it. This is your stop loss, right? So you took a loss. Now what did I told you guys, that if you took a valid loss, so that high or low should have been swept for you, and then you would have waited for another market structure shift with a fair value gap. But in this case, I guess that doesn't happen. Let me do it on 5 minutes. This was the London high, so it swept over here, and then I guess this was after the kill zone, so I trade after the NY kill zone, so no trades for us. There could have been, we won't be bothered there's no fair value gap. So Today is 8th December, and now let's go to 8th of the December. This is your Asian range high. This was your Asian range high swept. This was your gap. Now if in some of the previous video I told you guys, if you have a fair value gap like that big and above that too, now what you would do is to take the and measure the 0.50 level of your fair value gap. Now it totally depends upon you if you like measure the whole fair value gap candle or just the gap, right? So many people use this, and if you were previously, so they use this. So if you take this entry on 0.50 level and your stop loss would be above the 1%, like above the fair value gap candle, your first start 5 hour and the, let's say this, oh my bad, this was the first sweep of uh, Asian lows. This was the fair value gap, and after that this was another fair value gap. This could have been your entry, but this is above like 10 pips. So as I told you guys, you need your entries from the bottom. So if you took this, this is trade above the fair value gap, and your stop loss would be below, and your target would be the Asian session highs, right? The 5 hour and the Asian session highs. So I would probably not trade this trade because this was inside it. So if you were able to take this trade, and this could have been your 6 or 7 hour trade. Actually you took this as your take profit, so this could have been your 7 hour trade. Now Asian low swept, Asian high swept, and the low that swept, the Asian low is also swept. Now what you would wait for is either the kill zone to close and the swept of the kill zone, or if the price takes out the Asian the kill zone, the London kill zone, right? So in this case we swept the kill zone, and this could have been your valued loss with a BPR and a fair value gap, and for that reason we was waiting for we were waiting for these lows to be swept and another market structure shift for your entry, right? As I told you guys. Sorry, I got some notification. Yeah, so this turned out to be your equal lows, and this is where price swept it, and this was your BPR, and you don't need a break of market structure for your BPR as well. Let me find it. So if you get, there are some couple of cases that you get the double BPR, right? Like in this scenario, so you can refine it like this too. Now in this scenario you have the quadruple fair value gap or the BPR. This fair value gap, this fair value gap, this fair value gap, this fair value gap, and then price tags into it, and I guess that's aiming more. So let's take it from here. Don't be greedy. This is your entry. This is your PPR candles low, your stop loss, and your same target, the 5 hour and the 10 hour, and where to the London sessions highs 17. this is how you can make money with this session cycle. The only reason as I told you in the previous part, that I am not teaching you guys the complicated ones like the Marto use or the Bredex use is uh, I know that works well too, but as a beginner, you can pass your funded accounts from with this method as well. Risk 0.50 and take the trades on the demos first. Now, so many of you are trading your funded accounts. Even you are not yet fully trained, so and you are trading in the month of December as well. So I will January and then take your funded accounts. Till then, backtest the third quarter because the last quarter is usually like this, the messy price actions, and especially the December ends just very messy. So yes, that is what I can suggest you guys, that only backtest and watch different pairs simultaneously so that you can have an edge over Euro USD. If Euro USD is not working well for you, you can trade different pair. Like for me, if Euro USD is not working for me, I will go over to US 30, and in the last scenario I will use GBP USD. But as you guys saw in previous, like the whole month of December, the GBP USD works like well with the session cycle better than the Euro USD. Second video, and it's gonna be about the same model that I taught last night. So there were multiple questions that am I gonna teach the only the session cycle or another entry models. So the answer is there is another entry model, and that is the 5 rules which I have shared on my Instagram's highlight. So I will teach that on Wednesday, I guess. Until then, you can practice this session cycle, and you can backtest this as much as you can. On every one of you can take different pairs like Euro USD, GBP USD, Odd USD, US 30 or SPX. So this works everywhere. So do remember that the kill zone for indices are different. Do remind me after the video so I can share that. Okay, so let's start. So I have to tell you something, that on good days, this session cycle works very well. Like on this 28th October, we had the Asian low that was swept during the London kill zone, and we had there must be lower time frame entry or like a 1 minute time frame over here. And where should your target would be the if you are entering below the uh, Asian low, so your first target would be the London sessions high. Okay, so there should be your first partial like 70% of the trade, because what happens is like in this scenario, the New York kill zone started and it swept the liquidity above the this this London kill zone. Okay, so after this sweep of liquidity, we targeted this London kill zone low. Okay, so it, I guess, hit over here, and it was a like one whole day trade. Okay, so what I will suggest you is, let's say you have a trade. Let me make this. Okay, this is the the basic sell model. Okay, you have the swept over here, you have the fair value gap entry over here. Now let's suppose you have the last low somewhere over here. Now instead of like targeting the full take profit over here, you can take your trade partials at 5 hour and 10 hour and so on. But I usually do is I used to do when I learn this model. So I used to do 70% of my profits at 5 hour. Okay, so you can do the same, but I currently use the 10 hour. So you will get better with like experience or back testing. So let's go to the one number now. In on this day, the like the session cycle works very well, right? So I will teach you like what to do if you have scenarios like this, because the highs were set but we like they don't clear or reverse back to take the Asian lows, right? So let me go to the 1 minute time frame. Let the indicator is loading. 1 second. Okay, so we have this Asian session high over here. Okay, once this Asian session high is cleared, what you're gonna do is you're gonna drop to 1 minute time frames, as I said in the previous video. So let's see on 1 minute time frame. Do you have any entries over here or the market structure anywhere if you can see? No, because the closest market structure in this scenario would have been this one, right? You had no low over here, you had this low over here, but price did not tag or cross this, right? So it moved above. So this was ECB news, I guess, somewhere over there. So after this was another wick that swept the buy side liquidity, like this one. My bad. Okay, so do you see any fair value gaps somewhere over here? No. Do you see the market structure? This was the last low that price made. Okay, this was not as clear as it should be, so I would have probably missed a trade over here. But this was valid fair value gap, so you could have a trade over here. Let's say you took a trade on the fair value gap, and in this scenario, as I told you guys, that if you have fair value gap and your stop loss is like wide, so you can drag your or refine your stop loss to the fair value gap candles high. Okay, so in only in this scenario, right? So this was the high of the fair value gap candle. Okay, and this is my entry. So let's say you take your first partial at 5 hour. Damn, this was exactly 5 hour. Okay, so let's say you take your first partial or at 5 hour, or even if you did trade at break even. Okay, let's say this trade hit your break even. Okay, now what you wanna do is you wanna wait for another market structure. If you see, this was the build up, the trend and liquidity on lower time frame. Okay, after this you had this 1 minute swept over here, and like this move over here, right? Broke this structure, broke this lows, that was liquidity lows, right? And broke this last low over here as well. But do you see any fair value gap inside this? No. The only fair value gap that is present over here is this one. But this fair value gap candle had no market structure break. If you could have argued that this should be the market structure, but this would be the market structure only on 30-second time frame. But do remember, we are trading the 1 minute right now. So the lower your time frame, the lower your so after this 1 minute liquidity swap, what do you see over here? This is your equal lows, and I told you, if you have equal lows and you have BPR, balanced price range, right? so you don't have to wait for the market structure shift. You can take the trade of the balance price range. Okay, if you are new in the group, you can watch the previous video, so I have shared in that. So as one guy was struggling with BPR, if you have fair value gap on both sides at the same time, you can define it between the wicks of this, like this was the wick of the previous candle, this was the wick of the next candle. Okay, so this was the wick of the next candle. Now if I have to take the fair value because this was the wick of uh, the candle ahead. Okay, now but we are taking the gap between these two, so ignore the wicks and just follow the gap where it is. Now this is where the gap, if you use Windows computer, so if you hold control, it's gonna turn on this magnet and it will be automatically uh, get above the high, or high above the wick. Okay, so in this scenario, this was the balance price range. If I move this ahead, price exactly tags into it. Now let me show you how you can place your stop loss. Now if you have balance price range, there are multiple ways you can place your stop loss. The first of them is this one. Okay, this is the riskier one, as you know, but I usually do the candle that had the BPR, right? The candle's body. Do remember, do not the wick but the candle's body. Okay, so this is what I ideally do. So after this trade, where should your target be? The first one would be let me the first one would be the 5 hour. Okay, as I said, your first target should be always, let me tell you something, as I shared ahead, no matter how much the price dropped, okay, your first target should be the 5 hour. This is how you're gonna build your psychology. So if you trade live, always take the 70% or 60% off at 5 hour and hold the rest of the trade by doing it break even. So in this scenario, we had this entry, we had our 5 hour 70% off over here. And where should your next target be? The 10 hour. If you get lower than 5 hour, you don't have to trade that particular entry. So this was my tenor. You take the tenor and you are out of the market. But if you had to like target, so your target should be the Asian session low. But you know, as you know, price exactly tags into the Asian session high and it moved up. So what to do after this? As you know, there was no entry and there was not any market structure shift, so that we can know that the market is going to be bullish. So what happened after that is this last low was the liquidity, as I don't teach you in that video. Every high and every low have liquidity among and above and below it. So this was the buy side liquidity. This one have buy side. So this one was buy side liquidity. Okay, this was the high that was swept on 1 minute time frame. So this was the swept or the raid. Okay, so where is your entry gonna be now? This is very important. A guy, like, I don't remember his name, uh, Luca, I guess. Yeah, so what he was doing is he was chasing the market somewhere over here. Okay, his first entry was somewhere over here. So this is completely wrong. If you don't have your entry somewhere over here, like exactly at the top, so you don't have to enter somewhere over here. Okay, exactly, like you can completely ignore it. So in this scenario, I don't have like any entry. This was the fair value gap with the market structure shift, but there was no tag into it. So I will completely ignore this. The reason, because these next entry is there for you to leverage your trade. Let's say, let me show you something. Let's say you have a trade, let's say example, let's say I have the first trade over here, your target is this, okay, and you have somewhere fair value gap over here, okay, let's say price tags into it. This is your second entry, that is gonna be your leverage trade. Okay, I will do a complete video on how to leverage your trades, okay. I guess after this or tomorrow in the morning. So what happens after this is London Kilzone closes somewhere where, okay, now what you would wait for the swept of the London sessions high. Do remember, this is the day where this session liquidity model did not work pretty well, okay, and on that particular debate, like uh, if you had hold this entry, like at, like if you had took partial off at 5 hour, right? So let's say you have 3.5 hour somewhere over here, and the 10 hour from somewhere over here. So on a bad day you still bagged like 8 to 10 hour on this day, okay. After this you see this as a trend line liquidity. So this was the buy side liquidity that was above the London session high. You have equal highs, right? So after this equal highs, what do you see? The London kill zones the high over here. You have break of structure. So if you did not consider this as a break of structure, you must have done this one. Even if you have ignored this one, you have this market structure. There are like multiple market structure, right here. So this was the fair value gap that was over here. Now if you have to refine, this was the breaker block, and if you can go to like 30 seconds time frame, you can have entry of the breaker block. But I will suggest you to uh, stick with fair value gaps, okay, or fair value gaps or PPR. So you have your entry over here, you have your stop loss above the fair value gap. But let's be honest, I would have my stop loss above here to be safe, because this was like pretty low stop loss, like not even a pip, I guess. 1.6 pips. So where should my target would be? Let me show you. Let me go to 5-minute time frame. As you know, this was your trendline liquidity, and this was the last low that London session made. As I said in the earlier video, if the New York session clears the um high of the this London kill zone, right? So you're gonna target the low of the London kill zone. So this is where my target would be, this low, the first target would be, okay. So we bagged like 26 pip or 26 R over here. Do you remember, this was the bad day where our entry model did not uh, do pretty well. So even let's say my stop loss somewhere over here, okay. Now either the body of this or the candle of this. If there was somewhere BPR over here, I would have done the body of the candle, okay. So let's say you took off the like majority of your trade over here, and you have left with 0.10% of your trade, and that 0.10% target would be this Asian session low. Now I don't know if it was hit or not. This was the Asian session low, right? Completely hit it, Okay, so after this, let's move on to so this was 2nd of November. Okay, so on 1st of November you bagged like 25 hour or 10 hour. Okay, 35, and let's say you have five losses. Okay, it's not gonna happen though, but let's say you have 5 losses, so you bagged 30 hour on a bad day. Now coming to the 2nd November, this was a good day, guys. This was the Asian session low, this was the Asian session high. But would we waiting for either the swap of Asian session or either the swap of um, Asian sessions high or low, okay, during the London session skill zone. Now the set of the Asian session lows was somewhere over here. Okay, so it would be doing at that point is, where was it, somewhere over here, right? So this was the swept, right? After the swept, do you see somewhere anywhere like the market structure shift? No, during there was none. This was the last high, this was the last high, this was the last high, and this was the last high. Okay, this was the last high that price made, right? This was the market structure shift. My bad, I messed up with the lines. This was the market structure shift, right? Do you see any fair value gap between this? Yes, and it's there. And with the fair value gap, but you have the inducement for the traders too. Now the smart money traders would have been waiting somewhere below this. Okay, now you have your entry. And what did I told you about? If you have your stop loss like where's the major tool, like this, if you have your stop loss like this wide, or what you should do is you should refine your stop loss. Now either some of you would have gone with this or some of you would have gone with this. Let's say you have this, because the same Luca guy leader took this entry, like this, not this entry, but the entry with us, like the stop loss that wide. Okay, so let me do this one. This should be the like realistic stop loss, right? So where should your target would be? Now this is the main topic. Your target should be the Asian session high. Now where should you be taking the partials? As I said, uh, like you are a beginner with this model, right? So your first target would be the 5 hour, your second target would be the 10 hour. But like if you get some expertise in the model, what I would have done is my first partial would have been somewhere over here, my second partial would have been somewhere over here, and my third and the last partial would have been the Asian session high. Now after Asian session high, we have a market structure shift. Do you see fair value gap anywhere over here? Like this whole area, after it sweeps the Asian session high, we don't see any fair value gap. We only had the fair value gap somewhere over here. But as I told you need to catch the entries like at the top, at the like exact top of the liquidity set or the rates. So this was some like very below, so I would have not took a trade over here. So even after this you have a liquidity swap again on the, like this is where your London kill zone closed, right? So this was the pre New York opinion 7. right? So this was your pre. After this, what you would be waiting for is a market structure shift. What's this? Your market structure shift. What you have? Fair value gap. Is it tagged? Yes. This is where you entry. Now coming to the realistic stop loss, this was very wide, this was very wide, and now you see the fair value gap candle is like very big. So either you're gonna take the Fibonacci tool, right? Take it from the high of the fair value gap candle and the low of the fair value gap candle, and entry at the 0.50 level, and your stop loss is gonna be somewhere over here or somewhere over here, or you're gonna take the entries at here and your stop loss would be above the fair value gap. So what I would suggest you is to put your stop loss above the fair value gap candle and take the trade only if the fair value gap candle is like this wide, so you can take the trade on 0.50% level. What happens after this? No, watch this. Where should your first take profit? Pause the video and do let me know. There is like exactly, you can see it, right? So this was the low. It should be your first take profit, right? This was somewhat 8 hour. This was the low, and it had take profit somewhere over here. Now if you had like break even your trade, so this would have been like 0 hour. So as I said, you need to take profit, uh, like let's say you take a partial at somewhere at 5 hour. Okay, now you have your entry at break even. Let's say you took a 5 hour over here and it hit your break even. Now what are you waiting for? Another liquidity swap, because we have the liquidity swap on the sell side. Now there must be some entries. No. So what happens after that? You have the liquidity swept again on the after the London kill zone side. So this was the liquidity swap, and there was no like literally no entries in this whole selling pressure. There was entry somewhere over here, and this fair value gap, and this fair value gap, and so on. So this was the 2 days. Check this. This is the PM session. Okay, after the the New York session close, this is the after the New York session. That time is known as PM session. So PM session works well for the indices but not for the currencies. So let's say you look for a trade somewhere over here. You had the market structure shift at this point, and there was only this fair value gap. Let's say you took a loss somewhere over here. Okay, after this low swept, okay, you have this high that was taken out somewhere over here, and this was the fair value gap with the BPR, right? So this is where your entry should be, and where should your target would be. Let me show you. This was a news day, I guess. I don't know, like the PI on Wednesday, I guess. I don't remember. So actually this should have been FOMC, I guess, because FOMC comes at this time. So this was your BPR entry. Your target B, your first target would be this high, your second target would be this high, and your last target would have been New York session highs. Okay, now calculate how much did you make in 2 days. 27. Okay, 5 are 19, and this was 25 and 10 hour, and this was the 5 hour that you took partials of. Now do remember, this was the bad entry model day and this was a good one. So this is how you can trade them, and I will continue from 3rd November from tomorrow. Okay, so I hope this video brings some knowledge to you, and if you are completely beginner to these concepts like ICT, fair value gap, market structure shift, liquidity, you can ask me any question, so I can do a Zoom sessions with you, like one-on-one, and so I can clear your doubts. This is gonna be a very short video, and it's gonna be about a question that I was asked by a mentorship group student. I don't remember his name. So his question was, let's say if you have Asian highs, okay, and just above the Asian highs you have previous day's highs. So as you know, price have to clear every high and low to be uh, to move in the opposite direction, right? So let's say if it move the buy side liquidity, it's gonna head towards the sell side liquidity, and after the sell side liquidity, it's gonna head towards the buy side liquidity. So let me show you something. Let's say this was the move of the previous day. Okay, this was the high of the previous day. Okay, and after this high have the Asian session like this. Okay, so now this is what your Asian session is from here to here, this range. Okay, now according to our entry model, right, we would be waiting for the rate of this Asian session and uh, wait for the market structure shift and the fair value gap in for the entries, right? So if you have an entry like that and like you took a loss on this, so this would be a valid loss, and you would know that price is trying to rate this buy side liquidity, rate this previous day highs to be able to move towards the sell side liquidity. So let me show you this on a live chart. So watch this. This was the Asian session high. Okay, this was the previous day's high. Let me mark this. This was the previous day's high. So if we go to like lower time frames, according to our entry model, this was the Asian sessions high that was swept over here, right? It was a wick, but we will consider the wick as a read as well. So in this scenario, what do we have? We have a fair value. We have the fair value gap. We have the market structure shift. We have the rate. Okay, our rules are being followed. So this was your uh, fair value gap, right? So this was the fair value gap and this was the breaker block. So if you use fair value gaps, you can use that too. If you use fair value gap, if you use breaker blocks, you can use that too. Okay, now this whole candle was a breaker block. Now but just in front of the this candle, right, there is a wick. Okay, so now what you're gonna do is you're gonna refine it inside the fair value gap, but you don't need these wicks inside your zone. So this is how you're gonna refine it. Now watch this. We have the breaker block, we have the fair value gap, and we have like no wicks between this area. So this is how your entry is gonna be. Now let's say you have an entry and your stop loss is gonna be above here or somewhere over here. Okay, and after that, where should you target? Where should you target? Okay, for a 5 hour. Now where do you have the 5 hour? Now I have to show something. I draw it somewhere right here. Okay, so after this raid and this highs being unswept, so what would you do is, like, if you are in this scenario, okay, let's say if you are in this scenario that you have a previous day high just above the Asian session high. Okay, after the raid of Asian session high, if you get an entry, okay, let's say you get an entry somewhere over here and the highs are still there, pending to be taken out, right? So your the trade that you took over here is gonna be 1:5 at max. Okay, you are not gonna target 1:10, 1:20 or the Asian session lows. You are waiting for this high to be taken out. So this is where your 1:10 inches would be. So something is better than nothing. So this is why you should take partials on your trade. So let's say, according to our rules that I told you, that you have to take partials at every 5 hour, right? Let's say you took 60 or 70% off on this, and the rest of the trade hit the break even. Okay, and after this, what do you have? Another market structure shift, and after the market structure shift, you have this fair value gap. My bad. Your entry, your stop loss, your target 5 hour. 5 hour. Now from this here, in like 30 minutes you bagged the 10 hour or your profit target of the day. So I'm doing is, let's say you took 70% off here, you took 70% off here, and the rest of the trades hit your break evens, right? So now this was the buy side liquidity that at this time was swept. Now after this raid over here, what would you be waiting for? Because you know that this raid of your previous valid structure, right, like this, after the raid of your previous valid structure, the price is moving for this previous day's high to take this previous day high, and then so we took out the previous day's high in this scenario, and you had your first entry on your fair value gap, but there was no market structure shift, so I would have probably missed that trade. Because you see, this the stop loss is gonna be too wide, so even if that stop loss, you will only get a 5 hour trade, I guess. So yes, so let's say you missed this trade. Okay, after that we had another sweep of the highs of the London sessions at this time. Okay, and after that, what do you have? This was the trade that I guess that Luca guy took this one. Okay, and he shared that in the Telegram group, but mentorship group too. So this was a BPR. Okay, as we know, we don't need a market structure shift for the BPR trade. Okay, this was your high of the fair value gap candle. Okay, now what's your target? The 5 hour, and after the 5 hour, the 10 hour. Where is 10 hour? This. So 5 hour, 5 hour. Let's say you missed this trade. 10 hour, 15, and off what happened after that? So uh, there's like the move that happened on NFP. So what we were waiting for was to uh, swap this high and then move. I was anticipating for the NFP to take out this high and then drop. So that does not happens in this scenario, and price dropped. If we had this raid over here, right? So this could have been a valid trade, but we don't have a raid. We don't took this. We missed this raid. This was the fair value gap, and we also had the market structure shift as well. So this could have been a valid trade, but as you all know, we need a rate either on a buy side liquidity or a sell side liquidity to target the opposite direction. So there was one guy that was still confused where to target. So what you're gonna do is your first target, no matter what, is gonna be 5R. After 5R, you will target for 10R. Okay, so you can take a screenshot of this and take notes for this. 5R is your first target, and now it totally depends on you that if you take 50% of the trade or 70% of the trade. I will prefer you guys to go with the 70%, because as you like uh, totally beginners with this method, right? I know like most of you are using the ICT concept, but if you are totally beginner with this method, so what you're gonna do is you're gonna aim for 5R, and after 5R 10R. And there's another thing, let's say you have been trading this model for a month now, right? So if you are still confusing yourself, with your daily bias is wait for a swap of either a buy side liquidity, right, or a sell side liquidity. Let's say if you swap the buy side liquidity first, you're gonna target for the sell side liquidity. It is as simple as it could be. I don't know why are you guys confusing just only daily bias, right? So if it clears the sell side liquidity, the buy side liquidity, just play inside the liquidity cycles, right? You don't need the daily bias. It's been in today's video we will be going over through US 30 on 9th of December. So basically what I did after previous ranging days on Euro USD, I switched my trading pairs to US 30 and the pound USD. So I took one trade on Euro USD, and it was a 5R, and the rest of it hit my break even. So I will show my trades that I took on on US 30. So this was our Asian session highs, right? And this was some sort of relative equal highs as well. So we were looking for these swaps of the Asian highs during the London kill zone, and we had this swept by this upside momentum, and after this swept we had this market structure shift, and with this market structure shift we have this fair value gap, right? So if you were to take entry from here, if you let me zoom in, you see this was our fair value gap, and this candle gets inside the fair value gap. So this wasn't valid because the market structure shift happens over here, right? So this is not the valid one. So what you would do is to refine your fair value gap above the candle. So now this is your entry. Now what I did was I entered somewhere 52.40. This was my entry, and my stop loss was like now for you guys, you are new to US 30, so your stop loss would be above the highs or the lows, right? So what I did was my stop loss was let me see, was 70. So my stop loss was the 70, not 70. So what I did was I took my first partial at 6 hour. Where's it? Somewhere here. Okay, so why did I took it on 6 hour? Because I was away from my charts. So when I get back to my chart, the price 6 hour. So the first thing I did was to break even the trade and take off like 60% of my trade. So after this, my next target was the 10 hour, and this was the 10 hour. Okay, and I closed my trade on the 10 hour. Now the reason for this was I was busy and I could not manage the trade till the Asian session lows. So after this 10 hour, you could have closed like total 80% of your trade, and the rest of your trade would be for this as your target, the Asian lows. But price gets to like somewhere 16%, 16 hour, and then reversed. So I will show you mine. This was the 10 hour. Okay, and after this, when I get back, I was looking for the London kill zone to close, and I swept below the London kill zone and then towards the London highs. So why was I looking for that? Because we have the previous day's highs over here, right? So I was expecting for the price to clear this, didn't drop, to clear this Asian lows and uh, any build up that was left over at this point. So that did not happen, and this was not the entry according to our plan, but yeah, I took it, so I will share it. This was the market structure short, and this was the fair value gap. So I took my entry with a 6 size lot. I usually do 12 or 18. So I risk like, let's say 0.150. So my target was a London kill zone highs. So this was the 10, although I took my 5% as well from here, and the 10% and the rest of the trade hit my full take profit at the London kill zone highs. So after this London kill zone highs, once we swept these highs, I was looking for a short. This short entry would have been like with 0.30 or 0.50% of my risk, because you know the reason. This previous day's highs needed to be swept, and then we should be looking for our like the major cells, like the swing cells. So this is why what I was anticipating, and price did not exactly tax the fair value gap, although it had this market structure shift as well, right? So what I was waiting for is to tag it, and I could have like the 5 hour entry from here as well, because I am in so to risk like 0.25 or 0.50, this entry wasn't a problem for me at this point because I was in profits already. So it was tagged after like 1 hour and 20 minutes. So there was a misunderstanding in the group that if you have a fair value gap, right, and you have a market structure, you need a immediate reaction to that fair value gap and then the entry. Now if you have any entry like this is your fund, right? If you have entry like this is your entry with lowered of your risk like 0.50. So although I was already risking half my percent because I was anticipating this previous day's highs to be taken out. So what happened was I took my entry on the fair value gap and above this candle, actually somewhere, let me see, 56.80. This was my entry 56.80. okay, so why? Because this was the volume imbalance, so I was expecting the price to fill it as well. So that did not happen over here, and price like moved almost 2 hour. Yes, it moved 2 hour and then it hit my stop loss, and my bias was still the to clear the London lows and the Asian session lows. Once we cleared this previous day's highs, I was looking for shorts, and this is where the news came in, the PPI, and this was the market structure shift. Now if you have a situation like this, when you have a complete selling pressure or the buying pressure, right, what you would do is you want to take your Fibonacci tool from the highs to from the bottom to the bottom, and your entry should be above this. Let me share my Fib setting: 0, 0.5, 0.791 and 0.708. Now if you have like a complete situation where all of the candles are in one direction, your entry should be above this OTE, optimal entry point. Now if you have two fair value gaps, one is this and the second one is this, this was smaller one, but this one had have like more confluence. Why? Because if you drag it to the left side of the charts, you have a breaker block inside of it as well, right? Because this was the breaker block. Now it also tagged in on my MT4 on this bull USRD. So I took my trade on the breaker block and my stop loss was above this highs, and there were multiple reasons for my stop loss to be above. So you could have done this above this fair value gap candle, because one of the reason was because we have news. Yes, one of the reason was because we have news, and the second reason was because we have two fair value gaps at the same point. So I was not risking much as well on this trade. So I had like, where's the level? Actually the level is one in inside this skill zone. So this was my entry. My first target was the 5 hour, but this was on news, so I couldn't close it. So my take profit was the London session lows, so it hit all this my all my whole trade was closed on this London session lows. Although if this move was not immediate, so I could have like taken 70% off here, and my rest trade target would have been this Asian session lows. So this was 11 hour as well. So we had 11, we had -1, let's say this is 10, we had the 13, we have the 10 again. So if you were to hold this trade, this went for 34%, so this was the valid one. So let me go over how I took it. Now after this, all of these moves, we cleared this the previous day's New York session lows, we cleared the previous day's lows as well, right? So this is the indicator. I will share it once again. You can take screenshots and see. GMT minus 5. Do remember, you need to have GMT minus 5 over here and GMT minus 5 over here as well. The 19 to 0 is Asian session, the 2 to 5 is the London kill zone, the 7 to 11 is, although it is 10, but I have expanded it to 11. The 7 to 11 is New York session, and if you want this session to be shown on the previous days level, you need to click this history as well. So you need to custom add this like this, show custom level PDH, and that would be your previous day's highs. And if you go to level high, okay, and the second one would be the not the timing as well. The second one would be the PDL, previous day's lows, and that would be the low. And the third one would be the 830, and that would be the open. And the fourth one would be the MOP, midnight opening price, that is 00. So once we clear this previous day's lows, my expectations was to the price to clear London kill zone highs or to this 830 line. So I told you guys in one of the previous video, if you have these major moves towards any direction, price will always rebalance to like 0, at least to the 0.50 level of this move. So in this scenario, how could you have entered? Now this was the fair value gap, but this is not a BPR, and we don't have a market structure shift, so this was not the value trade. But if you look closely, you have this fair value gap, you have this market structure shift, and now watch this. You have this fair value gap, and these candles were immediately tagged into this fair value gap without breaking the structure, right? This was in our market structure shift, this was the highs. So what we could do now is to refine it and drag it towards the right side. Now if you were to take your entry, this would have been your stop loss, but if you see, this is very unrealistic stop loss. And if you have seen US30 or SPX or any indices on your brokers, you would have like wide ass spreads as well. So the realistic stop loss would have been below this wick, my bad, below this body of the previous candle, as I said in some of my previous videos. So what happened is partials would have been the 5R. Here's the 5R, right? So the partials would have been the 5R, and the rest of my trades target would be in NY session highs. And although I guess it would have fit me on break even, no. So this was the fair value gap that it tagged into, and it is now dropping. So this is how you could have like taken your 5R over here, 11R, actually 10R include the 13% and the 10% in one day on US30. So I will suggest you guys to first to backtest US30 and then trade accounts as well. So basically this is it for the day, and let me show you one thing. The guy Puth, I guess this is what his name is. I'm sorry if I am pronouncing it wrongly. So this is your entry, Like you swap the previous day's high, you swap the session highs, and this is your entry. Now your all of the like sell side liquidity left is below the London kill zone lows and the Asian lows, right? So but if you are a trader, this is your buy entry, right? Just forget this, all of this. Let me, I can't even delete it. So if you are a smart money trader, you would have your buy entry over here and over here, because these are your valid order blocks, right? So these are, if you see any order blocks against your trade, and only if your trade is valid, like if it took previous day's highs, Asian highs, the London kill zone highs, and you are targeting the sell side liquidity, and if you have any order blocks inside this is your traps, because you won't be buying over here, you won't be buying over here, you are not buying over here because your target is the session lows, right? So all of these order blocks are your smart money traps, and this is similar for the buying situations as well. Thank you. So we recap of 5 December and how like majority of the group members took all of these trades. So as seen in the previous videos, that we wait for the market to either set the highs of Asian low, if Asian session, or either set the lows of Asian session, and then we wait for market structure shift and a fair value gap or a BPR for our entries, right? So this was a basic model that we trade. Now as many of you were struggling with your bias, I don't know what is there to be confused with, right? Let's say in this scenario we clear the buy side first. Where should your target be? Your first take profit would be the 5 hour, your next take profit would be the 10 hour, and your last take profit would be the Asian session low. If you set the Asian session high, your target is Asian session low. If you set the Asian session low, like this during the London kill zone, so we set the Asian sessions low. Where should your target gonna be? Your first target would be the 5 hour, your next target would be the Asian sessions high. But in this scenario, what happened, we read like price tagged, I guess you will see that. So after that, this green box is the London kill zone. So after this London kill zone lows, would be wait for our entry, and where should your target gonna be? The 5 hour, the 10 hour, and the next target would be this, the London sessions high, and after this the days high. So for today's high till this point was this one, right? So this is what your target gonna be, and once we set the our day's high, we would be waiting for our selling entries, and this was after the daily swept. Okay, let me show you something. Let's say you swept the Asian sessions high, your target is gonna be Asian session low. Okay, if you swept the London sessions low, your target would be the London sessions high. Okay, there are three sessions, right? Asian session, London session, and the New York session. Okay, wait for the either side to be cleared. Your first target would be the 5 hour. Okay, you can write this somewhere. Your first target would be the 5 hour, and your next target will be opposite side of the liquidity that was cleared. Let's say we first took the buy side liquidity. Your buy side liquidity from the Asian highs. Now your target would be the sell side liquidity below the Asian lows. Okay, this is as simple as it could be. Now in this scenario we cleared the daily highs. Okay, this was our daily high right here. Now where should you target? The daily lows. Now from this point to after like somewhere over here, where low, this one was your daily low and this one was your target. Okay, now let me show you how you could have taken all these trades. What was the procedure for the day? Now coming to our basic model, this was the Asian session high. We have relative equal highs, that is also liquidity. Okay, this was liquidity. And what do we wait for? Our session high or lows cleared, market structure shift to the opposite direction, and this was our market structure shift. What happened after market structure shift? We does not have any entries like somewhere over here. Okay, so what would we wait for? Our fair value gap and market ahead. Now this is your fair value gap priced broke the market structure shift. We cleared the buy side liquidity. The head is being followed, right? So what you're gonna do is risk the 1% per trade. This is your stop loss. Now where is your target gonna be? So this is your 5 hour. Okay, and it was 17 minutes. After that your target is gonna be, let's say you took 50% off at the 5 hour and 30% off at 10 hour. Now you are left with the 20% of your trade running, and the 20% of your trade would be with a break even, and that is gonna be the Asian sessions low, right? You don't need to target anything more like this low or the previous day's low. Now that would be like extraordinary targets and you're gonna miss your entry, or price may reverse and hit your break evens. So let's say if you hold this trade and this was a 27-hour trade. Okay, but the Asian session lows, we swept the sell side liquidity, which means we swept the Asian session low during London kill zone. Now what do we wait for? A market structure shift, a fair value gap, or a break or a BPR. Okay, so this was the market structure shift. This is our fair value gap, but if you look closely, you have a BPR, your refined entry. Let me do this. Now this is your refined entry. This is your stop loss. Now where should you target? Your first target would be the 5 hour. Your next target would be 10 hour. Okay, and the last target that you should aim was the Asian sessions this. Okay, this the rate that was happened on the Asian sessions high. Okay, so you took 10 hour and the 20% the break even somewhere over here. Okay, and how much was that? 10 hour. So right now after this was the London kill zone. Okay, this was London kill zone's low. We swept the low. Now what would we wait for to sweep the now? Was this London's high is still pending, right? Asian's high cleared, Asian's low cleared, London's low cleared, London's high pending, right? So this is the last point your target would be. Now in this scenario, what do you see? A market structure with a teeny tiny fair value gap. Let's fit your entry. Now watch this. Your stop loss is your stop loss would be like 3 pips. Now you can define your stop loss to like don't take the wick, take this body of the candle. Okay, now if you don't have the ECN or raw spread account, so don't do this. You need to add your loss and then aim for your targets. Now your first target would be again the 5 hour, the 10 hour, and the rest of your trade would be the London sessions high. Okay, now we cleared the London sessions high with 15 hour. We had a 10 hour, we had the 26 hour. Do remember this is just in a day. Now right here we swept the London sessions high. Now we would be waiting for a sell over here. Do you see any sell somewhere over here? Now this was the only one that I could see. This was a BPR. Okay, now let's say you lost one trade. Okay, let's put the stop loss somewhere over here. Right, so you lost one trade. After 3 winning trades, you lost one trade, and after that you cleared the previous, not previous, but the daily highs. This was okay. This was our daily high. Okay, after this buy side liquidity swept of Asian highs, this was our daily high that was swept over here during the London kill zone. So during the London kill zone, what do we see? We see a fair value gap, but there was no market structure shift. But if you look closely, you have a balanced price range. So what did I told you in the previous videos? You don't need a market structure shift when you have a BPR. So in this scenario, this was your entry, this was your stop loss. Let's be realistic with your stop loss, and you put above the wick. Okay, because this was getting like below the 1 pip range. So now where should you target now? Now this was like one of where our entry model works very well. So let's watch again. Our Asian highs swept, our Asian lows swept, London lows swept, London highs swept, daily highs swept, right? And after that we had our BPR entry. Now your target would be the daily low created that day. This was the last low that we created on that particular, it was 5 December, today's trade. Now how much is this? 43. So 43, let's be realistic. 5 hour, 10 hour, and after that the rest of the 20% of your trade would hit that 42% of the reward. So this is all of the entries. One was 28, 27, one was 10, one was 15, -1, and 43. So this is just the basic model that we trade, and it is easy, very easy. I mean, not like all of the mentors do use the same. I have like literally watched every one of them, and what to do is they have changed the names. Like I as a Judah swing or turtle soup. So don't confuse yourself. He like till now what I have seen that not many use these session cycles. What they do is our second entry model that I will teach on Wednesday is, let's say this was 15-minute high. Okay, and now they would consider this as a liquidity swept. Okay, now this is breakout market structure. There should be a fair value gap somewhere over here. Okay, and within the fair value gap they will like drop down to lower time frames like 1 minute or 5 minutes, and inside the lower time frame they will find the same model, like a low being swept, a market structure, a fair value gap, and then the trade. So this is quite complicated, and my win rate was not as good as I using this one. So I will suggest you, if you are using or trying to pass the funded account, so this one is more preferable and works very well like every day. This is 31st October, and on Euro USD this was a pretty bad day. So this was your Asian low swept, and just after Asian low swept you have this fair value gap. Yeah, you have the market structure shift, you have this entry on the fair value gap, and this is your stop loss. Now this would have been an unrealistic stop loss, so let's say you take your spreads in this stop loss as well. So although the stop loss was valid below the wick as well, so this would have been your 10-hour trade. Okay, just after the Asian lows swept, and after that the rest of the trade hit your break even. Now as it hit your break even, you know that this low is your sell side, and you would be waiting for this to be swept and in potential entry on the market structure shift. So there is none with a fair value. This is where I can see some, but it was not tagged as well. This was the fair value gap, so no buying entries and this move, right? As I told you, you need to buy either on the bottom or either on the top. Don't buy in the middle of the move, so that's where your majority of your stop will be hit. At this time, at during the London Gilt Zone close, now you are waiting for the price to either sweep the highs or either sweep the lows of the London Gilt Zone for your potential entries, right? This is what I taught you guys in the previous videos. So what did price swept first? If you go like this, the lows, and this is where your fair value gap entry is, and this is your first stop loss. Okay, your 10R and your -1, and like for me, I can say is, if I make the 10R on my first trade, I usually don't trade for the day, and if I take any trade, that would be lowered with lowered risk to close my days in profits. So let's say if you follow the rules, 2 losses per session. So this was your first loss, and there was another one. This was your the second loss. Both of them were valid. You have your proper sell side rates and fair value gaps and market structure shift. All of these losses were valid, and if you were to take any other trades, and all of these losses were valid. Now what was the reason behind this losses? If you look somewhere here, I don't know what caused this move. Either there was news or this happened during the New York session, 25th October. I will watch the history of the news, so I will let you know if there was. So this is the imbalance. Like I told you guys, price will always look to fill this huge imbalances, and all as like price is fractal. What happens on 1 minute will happen on 1 day as well, right? So this happened over here, and price was filling these gaps. Okay, so this was the reason that price swept this previous day's lows and still moved towards the downside. Now it could have like targeted this previous day's lows to swept it, and then it could have like taken the previous day's lows and could have moved towards the buy side. So we don't know the like exact direction of market as every time, right? So this is how you can like if you see like these huge imbalances, so this is the like a confluence, you can say, that get out of the market with two losses per session, or a win that you had over here. So like you see, this was the fair value gap, and price exactly swept this Asian lows and then the London session lows and tags into this fair value gap and then moved upward. So this is what price on that day uh, caused all of these sells. So because even before a day, the model works very well. We swept the previous day's lows and the Asian lows as well, and then the London kill zone, we could have been any entry that the target would have been the highs, and the second target would have been the Asian highs. From here to here, you could have your 10-hour entry. Now, in this scenario, how could you catch your the cells, right? Because after this swept, we were looking for buys, right? So what could have happened if you were to take the cells? Our second entry model that I told you guys that does not have any major win rate, or like it have good win rate but not the risk to reward, suggest that we need a liquidity swept on higher time frames like 15 minute or the 1 minute, right? So the first, if you were to look, was this, right? So price was moving like this or this, right? And it clears this highest liquidity and then moves towards the downside, right? And after this liquidity swept, you were to wait for a fair value gap on the higher time frame like 5 minute. Okay, so this was your first rule, this was your second rule, and after this when the price gets into this fair value gap, you were looking for the same model, like the liquidity swept and the fair value gap on 1 minute as well. So if you go over here, this was your 5 minute fair value gap, and this was your the 1 minute high that you had. So all of these fair value gaps does not have any retracement, right? For you to take any entry, the last retracement that I can see is here, and that did not comes up to the 0.50 level, like the equilibrium. So this was not the valid one, although this had more confidence, because this swept this 1 minute highs, and this one comes with a BPR. So this could have been an entry, could have been your stop loss. And now watch this model in this model you don't have your put your stop loss above the candle highs. With this model your stop loss would have been like the above of the highs or above or below of the lows. So now in this scenario your target would have been the lows that was made. Like, close this session tool. Now you don't need the session tools in this model. So where was the last lows? This one. Now after doing that that much hectic, this this is what you get, the 5% of the profit, right? And this is not how I like it. I use the session cycle more because of this, because whenever I used to trade with this model, the risk to reward was very low for me. So if I use it to pass my funded challenges, so I lost more than I was winning, and it was like messing up with my psychology. So this is why I use the session cycle more for me, because the only reason you see losses on with the session cycle and on me is that I have like back tested it and I have a couple of months of experience on it. So once you get used to trade the session cycle, this is when you can pass your funded accounts or like get a better win rate with it too. So what I can suggest you is um, back test as much as you can, and if you want I can teach this model as well, but uh, I don't see any like major risk to rewards like the session cycles with this model. So although you could have like a layered your trade with this as well and this as well, but this could have been hit your stop loss too. So this does not have any major win rate or risk to reward. This is the only reason that I can see sells with my entry models, either the session cycles or this the 5 rules. So for me what I could have done is to, where's that, to take the first, the 10 hour and these 2 losses on the New York session, and I am out of the market. I'm happy with my 8 hour for the day, because I'm closing my days with like 8% of profit. What else do you want? If you are trading the live or the funded account, you could have passed your funded account and that's it for the day, even on a bad day, right? So if you took 2 losses on this session, now what you would do, you would close your trading view and you would have wait for your the next day, either on your USD or GBP and you as you are in, let's say you missed this the first trade and you took 2 losses, 2 on your funded account, and I can guarantee you that you can catch another entry in the next day. Like, not in the if not in on the next day, you could have caught and caught it on the day after. So this is how simple. You don't need any complicated stuff for this. Once you get some experience with this session cycle, I will teach you everything. For me, the 90-minute cycle is like, you can only say that that is confidence for you, because what I see is uh, it was like the day before yesterday, Maruto was buying and we were selling, because the London and Asian kill zones were swept. So we was looking for sells, and the price exactly went to sell, and Maruto took a loss there. So if you like use two different models and combine it, and this will completely mess up your session cycle models. So this is why I'm not teaching that currently. Once you get experience, I will teach everything to you. So it is only 8 days since we started, and you're like, some of you are making profits. One of the guy that I don't know his name, the I guess Keiko, I don't remember. So he's up 10 hours since we started. So this is what all I can say. If you want, I can teach you other stuff right now as well. I have no problems, but all I want is you to backtest this and learn this as much as you can. Peace. This is gonna be uh, the video about how you could have taken the trades on December 6th. All know with our entry model, what we wait for is either the swept of Asian highs or the swept of Asian lows, and so on. So in this scenario, we swept the Asian lows first. Okay, right at this point, what you're gonna do, drop down to 1 minute time frame. So this is where it is. So this was your Asian session low, right? And what do we wait for after Asian session lows being swept? A market structure shift, a fair value gap or a BPR, and our 5-hour profit target. So in this scenario, do you see the market structure shift in your buys? Pause the video and watch it by yourself. Okay, so this was your rate, and for me personally, I would have a buy at this fair value gap. The reason for that is this was a valid fair value gap. Okay, we swept the low, we had the market structure shift. Now even if you take this wicks or this wick, this was a proper market structure shift. Okay, and after the market structure shift, we like broke through the fair value gap candle. So this is where our stop loss is gonna be. So let's take this as -1 hour. Okay, so let me do it. Damn, I actually changed my trading view, so the settings are pretty new. Was this short entry? 1 second, guys. Okay, so this was a long one. This is the, so this is where my buys would be. Okay, and this is where my stop loss. So we took this -1 hour. Okay, after this, what do you see? You have these lows. It was swept again on 1 minute time frame. Okay, and you have a BPR, balanced price range, right? Now if you refine it between the wicks, this is how it would look like. So this is another entry that was possible before London kill zone. So this is where your stop loss is gonna be below the fair value gap candle, and where should you target? The 5-hour. Now this is your 5-hour. -1 plus 5. Okay, you are in 4% profit. After taking 5-hour, price went back because we have this previous day low, right? Now I guess this was the previous. Okay, and like I have told you about, if you have a previous day low just below the Asian sessions low, so you take your profits at 5 hour and wait for the previous day lows or highs to be swept, and after that you're gonna target to the opposite direction. Now in this scenario we hit the swept on previous day lows as well, right? Right, bottom. Okay, we swept through the previous day's lows. That we had this entry, okay, with a fair value gap and a market structure shift, right? This is where your second entry would be, third entry, sorry. So this is where your third entry would be, and your target would be the same. The first target, the 5 hour. Okay, so now you are in 9% profit, even before the London kill zone, right? So after that, this was the last low, it was swept again. Okay, now many of you were confusing between this entry. This was the fair value gap, but with no uh, balanced price range. So I don't know why would anyone took this trade, because your possible market structure shift would be over here, because price went through this low with a momentum, right? And there was no correction to be considered as a break of market structure. So in this scenario, this was only fair value gap with no market structure shift. So this is not our entry. We only take the BPR entry if there's no market structure shift. So this is not valid. Now after that, where do you see another entry? Now this is the market structure shift, right? Either you take it from here or you take it from here, but this one was more valid because this was the last lower high that price made. So at this point, what do you see? This is the point from where your fair value gap started, and this is the point where you see your balanced price range. So as I told you guys, what you would do is to wait for the price to get into the BPR, because BPR have more confluence than fair value gap, right? So if you have taken this trade, your stop loss is gonna be below this. So this is hardly like 1:3 or 4, I guess, I don't know. So but if you took the trade on BPR, now that is where your stop loss is gonna be low in uh, like very low, better than this, right? So this is here your buy entry on the BPR, and this is where your stop loss, right? Now where is your target? The 5 hour was exactly on somewhere on the highs. Okay, now after this 5 hour, where's your next target? The London's high, because you see this was created our price created the London session high and then dropped, right? So this was your second target and it was 7.5, and your last target would be this Asian highs. Okay, so this is 10:24. Now 5 hour -1 and 10. After that, what do you see? The swept of Asian sessions high. After that, what do? We wait for a market structure shift and fair value gap or BPR entry. Now you were confused between this as a market structure shift. This was not a market structure shift. This was the last market structure shift. Okay, so if you have taken this as your fair value gap, you have no market structure shift to trade this, because this was not a BPR. So in this scenario we would have missed this trade. Let's say you took a loss over here as well, so you are -2 and in 3 wins. After that we again swept the buy side liquidity, okay, and price tags into the fair value gap. Now you see this as your market structure shift, okay, and you have a fair value gap. You have the first tap, you have the second tap. Now it depends on you where do you enter the trade. So this was the short entry. Let's say it took it from here. This is where your stop loss is gonna be. The colors are like very dark. So this is your stop loss gonna be, and your target would be, the first target would be the 5R, okay, and your next target would be the London sessions low. You see this, a guy was selling somewhere over here on BPR to target this London sessions low. You see, price will always clear the equal lows or equal highs, but you have to know when. Okay, this was a clear buying bias. So after clearing all buy side liquidity, we will go to the sell side liquidity. As some if you are somewhere over here, we took the Asian lows, right? We took these lows, we took previous day lows, we again took these lows. So you think price is gonna takes only the sell side liquidity? No, because we have buy side liquidity too, and it's gonna swap that as well. So price went to the buy side liquidity, swept it, and then comes back to the sell side liquidity. So this was your 11-hour trade, okay, with the partials on 5 hour. Now after that, this was your BPR, okay. Now if you have taken this trade on a fair value gap, this was valid, and this or if you are waiting for the balance price range, it was valid too. If I were on the charts at this particular time, I would have missed this trade as well, because I usually trade BPR more than fair value gaps. So this was your trade, and did we took it? No, on this side, I guess the second video or the third video, I don't remember. So on the, I guess, second video, I told you about 830 line, price line. So whenever price is below the 830 line and you have your fair value gaps or order blocks, it is also known as PD arrays. So if you have PD arrays above the 830 line and price is below the 830 line, like in this scenario, you have this fair value gap and you have this fair value gap, right? Like even if you refine it above this wicks, let me take it, even if you refine it above this wicks, right, you have this fair value gap above the 830 price line, and at this particular time price was trading below this, okay. Now price went back to the fair value gap above the 830 line, okay, and then dropped. Now when price comes at this fair value gap, you will time frames and find your entries. Now this was a very small fair value gap. The French guy, I don't remember his name, Ulrich or I don't remember, he took this trade, okay. Now this was another potential sell entry. Your stop loss is gonna be above the fair value gap candle. Now you would have asked me that there is no market structure shift, but if you look closely, you have VPR once again, and your target would be the same London session lows. That was 14-hour trade, Now if you were to hold this trade, this was around 20. So let's go with our target. Now let's do a recap. First lows, okay, Asian session lows swept. Okay, we have our first loss. Okay, we have our first win, that was 5 hour. We have the swap of previous day's lows. We have another 5 hour entry. Okay, there was no market structure over here, so we missed this fair value. This was a BPR entry. Okay, that was 10 hour. So we in total are in 19% because we lost one trade over here. So this was not a valid trade, but still if you count it as a trade, let's go with -1. So you're in 18% profit, and this was the 11, and this was the 14. So this is how easy and it works every day. I don't know why were you confused with your bias, because when I opened my Telegram and I saw that Luca was selling somewhere over here. Bro, why would you sell over here? Because this was your Asian highs, right? This is your bias. Bias had liquidity. Now what should your bias would be? Bias, right? Because you took the Asian session lows, okay, and you are now heading and you took the previous day's lows as well. Now you are heading towards the Asian session highs. Now this is your target would be no matter what. So this is where the price went. After this Asian session swept, we have the now for this entry, where should your target would be? You see, Asian highs swept, Asian lows swept, London highs swept, and what is pending? London lows. So where should your target would be? The London lows, right? And that same Luca guy was, my bad, was taking a buy somewhere over here. Now I don't remember where he was buying. Now like all of the buy side liquidity is cleared, right? If you see it in intraday picture, all of the buy side liquidity is cleared. Now what is left? The sell side liquidity. Now where, like, why would you buy over here? Your target would be these London lows. So this is what happened, and we bagged like, let's say, 30% in a day. It wasn't a bad day, but yes, it was choppy. But if you like back test it, the this entry model on different pairs, and like I don't remember the if you use this soft Forex simulator, there's a crack version too, so you can use it for free. Download it and simulate your trades live, so you can get better with your experience instead of trading view. And this is it for this video. About a recap of Euro USD from December 7th. Okay, so this was your Asian lows that was swept at there. Okay, and after the swept of Asian session lows, you have this fair value gap. Okay, actually I guess this was a BPR. Yes, so you have this BPR with a market structure shift as well. Okay, your entry would be somewhere like that, and your stop loss would be the candle of the BPR, right? So as you don't know, like if the market is rangy or choppy today, so you will use your normal stop loss placing, right? So this was your first loss, and after that you have another fair value gap with a market structure shift as well. Yeah, so this would be your second loss. So you are 2 hour negative. After that you have these rates on these lows, and you have this uh, bullish pressure at where is it, 215. So in third kill zone, this was your fair value gap at the extreme. If this was a BPR, I wouldn't have taken this trade, because this is a FVG and you have a couple of them at in a single momentum, so you can take as you know, we have the bearish candle in between them, right? So this was the fair value gap, the only fair value gap that I can see in from here to here. Okay, now this is where my first entry would be, on the open of fair value gap. Now where should my stop loss would be? Now you know that you are like following all the rules. You have the Asian low swept, you have the fair value gap, you have the market crash shift, you even have the BPR as well, but still you are losing the trades. So at this particular time, you know that market is very rangy or choppy, and you need to close your days in blues, like in profits, so you will get back with your normal stop loss placings. So be it losses. Now this was your fair value gap candle. Now many of you would have been gone with this, right? So this was not the case at here. Your stop loss would be the body of the previous candle. I have mentioned this in one. Your first target would be the 5 hour. Where's the 5 hour? Okay, your first target would be the 5 hour. Now you are in positive 3% of for the day, right? Then the rest of this hit your, let's say, break even. Okay, because if you took this fair value gap as well, this could have been a trade again, but not in this scenario. You have the move again, like the market structure shift and the fair value gaps, and for me this is what I can see. The market structure shift, where's the structure? You have the fair value gap. Now you know, in this scenario, as you all know, you have to use your stop loss like this, right? On the last low, because the pair is very choppy today. So in this scenario, if you do this, so this is where your stop loss would be, this is your entry would be, and this is where your stop loss would be. Now this is like 5%, so we won't use that wide stop loss, right? So for this, what you could do is take the 50% tool. Now this is where my 50% of the fair value gap is. Now I will ensure only 50% of the fair value gap, and my stop loss would be the last body, the body of the last candle before the fair value gap. So after that, my target would be the 5 hour. Okay, my first target would be the 5 hour, and my second target would be the Asian sessions high. Now that turned out to be an 8 hour trade. Okay, so we didn't hit any break even or anything. So 8 hour and 3, yes, including them, this was the 3 hour. Okay, you are in 11% of profit. Many of you were catching the moves inside the kill zones, right? So this is not how you should do. Like, this was the Asian sessions high swept. Okay, now you know you are at the end of the London session. So what you should do is you should wait, like if you are somewhere over here, right? So you know that you are like at the end of the London kill zone. You should wait for the London kill zone to be end, and then wait for the swap, because by this By doing this, you would have taken out the London sessions highs, and then your target would be the London sessions low. So in this scenario, where was your first entry after the London session swept? Actually, this was the market structure shift. Okay, and this was the fair value gap with the market structure shift. Now this was a valid loss. Some of the guys were using this as their stop loss. Now, as you still know that market is rangy or choppy, your stop loss would be above the high, and you could have taken the 50% of this. So you have another loss. Your day turned out to be a 10 hour. Counting this was 11, and this is minus 1, so 10 hour. Now after this, what do you see? This was a fair value gap, but I don't see any clear. Yes, there was this uh, structure shift with this BPR. Actually, this was BPR, you don't need one. So this was your entry. Your stop loss would be the body of the above candle, and you would be probably taken out on this trade as well. So you are on minus 9 hour. Do you remember your first trade was this, your second trade was this? Now, as you know, you set the Asian sessions low. Obviously your target would be the Asian sessions high, so your bias would be the buys, right? You won't be selling it here, you won't be selling it here. You know that the Asian sessions highs are still pending. So in this scenario, as we know that Asian sessions highs are cleared, lows are cleared, London sessions highs are cleared. No, only thing is left is the London sessions lows. So after, we will continue looking for the sells. So this was the build up before the New York kills. This was the build up, right? So after this build up, you don't see any selling pressure with a fair value gap. This was the selling, like this could have been a counter trend, but this is not as a selling pressure because you don't have a fair value gap inside it. So the only selling pressure I could see is this one. But in this scenario, this fair value gap is not inside the 0.50%. Like this is below the premium zone and you are selling in it. Okay, as you are a beginner, you don't know about premium or discounted. If you're looking for sales, you always look above for sales above the 0.50 level, and if you're looking for buys, you for buys below the 0.50 level. Okay, mark this on your Fibonacci. So let's say you took another loss set here. Fuck, I didn't break even. So you are minus 8% of your day. We did the last buy side swept over here. Okay, and if you look closely, you have the market structure shift with a fair value gap. Okay, now this is where your entry, and as you know, the stop loss. And where should you target for this particular trade? Stop and tell me. Stop the video and tell me. Now for me, what I would have done is to close my like days above 10 hour. So as I am already in like 8% of profit, my first take profit would be the 5 hour. My next target sessions lows, and when this was the target would have been met if somewhere over here. My next target would be the London sessions low, but I doubt it would, like it won't go till there. This is for 53 more pips. So how much was that? The trade went for 13%. And after this first trade, you would have this internal range liquidity on 1 minute, and you have this BPR, right? This was your balance price range, and price exactly tags into it. Your stop loss above these two candles, your target would be the same, the New York session lows. The first would be the 5 hour, the second would be the New York session lows, right? And you see after that, this is only if you are layering your trades, because I won't be taking this trade as well. I will only look for this, the one sell or the one buy from the bottom or the top. I only do the one trade, and that's enough for me. I don't do this layering. And like on a good days, like we had on Monday, I would probably go with layering with 0.25% of my risk, but I don't do it every day. So this was the BPR, this was your second entry, and after that you have another BPR. This whole was your fair value gap, and this was the last fair value gap. So this was your BPR put, and if you can see, price exactly drops to our target if it was the New York session open. So we still are yet to be met with our target, but as you all know, 10-hour target, 5-hour, 10-hour, and our next target would be the 20% rate would be the New York session lows, and same goes for this one. So 10 from here, 10 from here, 8 from here. This was 5-hour trade, -2, -3, and minus. So after 5 losses and I guess 5 wins, no, 4 wins, you are up for the trade for the day, and that would be like I guess more than 20%. Now let's go over US30 as well. US30 like gave all of the entries today. So this was the Asian session swap. This was the fair value gap, but there is no market structure shift. Is there any bullish candle? No. Where is the bullish candle? The last bullish candle, it is here, but it did not reach there and break through this high. So this was not a valid trade. This would have been a valid trade if there was a BPR inside. So we swept again from this low, and now this was the fair value gap, and this was the BPR. So this is how you would have refined it. Now let me show you something for your stop loss. If this was EU, like Euro USD is choppy, your stop loss would have been this, or your stop loss would have been this. And if this was EU on Mondays, like if you remember, this was your stop loss, the PPR candles low. Where would you target? The 5-hour. It target met at somewhere here. So it exactly tags into the 5-hour on this fair value gap, and then drops again, and the rest of the trade took you out on your break even. Now after that it went again in the buy side direction. This was your, let me define it, this was your BPR, and let's say you took a loss over here. Okay, although this did not look pretty well, but let's say you took a loss over here. Okay, this was the last loss. Price, this, if you see this as a trend line liquidity, the build up, during the London kill zone, price swept through it again, and I took one loss. Somewhere here, I don't remember. Yes, I took the first loss on on US 30 somewhere here. This was my first loss. This was the fair value gap. This was the market structure shift. We swept the Asian lows, we swept the London lows, and we should target for the London session highs. So this would have been my stop loss, and my target would have been the 5 hour first. Okay, but I got greedy and I was targeting 10 hour of my trade like I usually do. So my this trade took me out on break even. I put this trade on break even on 5 hour, and I did not took any partials out of it, because I was so confident on my trade that, because we set the Asian lows, we set the London session lows, and this was the valid entry. So that's was the reason I was confident on my trade. After that, we swept again right here. Okay, and this is where Cristiano took his trade, the sniper student in our group. This was the fair value gap. After sweeping all the lows, now you would target for the highs as well, the buy side liquidity. Your first target would be 5 hour. Perfect. And your next target would be 10 hour, and after that you were London sessions highs. Now watch this, 30%. Right, 5 hour if you were to trade over here, because your rule is you need to take. Okay, 5 hour, let's say this as a 30%, 35. We took a loss over here I guess. Okay, and one loss over here. So 2 loss and 3 wins, and you are all good to go. If we go through US 30's history with this indicator, let me delete this. Now this was the only day, no, not this one, this was the only day that I see no entries. This was the Asian session. In London session, let me do it some like this. This was the Asian session. We swept the Asian session, okay, and we swept the London session at this week. And Friday US 30, oh, NFP I guess. So price exactly there would have been the fair value gap and our 1 minute entry model as well. So if you are watching this video, I want you to backtest US 30 on December 2, and like all these past days, like a week or two, so you can get better hands on this model. So this was the Asian lows. Price swept the Asian lows in London session, and then we took a buy somewhere here, and our target would be the 5 hours. Second target would be the London session highs. Third target would be the uh, Asian highs. See, the price swept the Asian highs first. We took a sell. It would have been a sell. We targeted the Asian lows. After that, we took a London session highs. We swept both of these highs, and during the New York session we again dropped, and your target would be the London session lows. So this is why US 30 for me over USD, Euro USD. But yeah, I will keep an eye on both of them like for a week. So the one which works better for me, I will trade it. So this was the Asian session. We swept the buy side, and price again targeted the Asian session lows, and same like here, we swept the highs. We created equal lows on London kill zone, and the New York kill zone swept this, both of them. Same in here, we swept the lows. Like days like this are perfect, right? We swept the Asian lows, we swept the Asian highs. Okay, then again price went back here. This would have been there would have been your entry, there would have been your entry. And when price went back there to sweep this Asian the London session highs, there would have been another entry that would this is where your target would be for this cells. So this is same all over in US30. US30 works very well with this indicator, with the session cycles. So I want you to backtest the previous 1 week of your US30. Sorry, I guess I said Euro USD before. So this is it for today, and if you have any questions you can ask me in the Telegram. The last video about session cycles and how and what do I look for when I get into the markets. So my plan was not to record any more videos about session cycles, as many of you were like already doing it much better. So there were two persons that had some issues with it. So basically the time that I look for trades is somewhere like before 10 to 15 minutes before the London kill zones. So this is when I get to my charts and look for potential sweeps on pairs like that I trade, like Euro USD, US30, Pound USD, and I have added odd USD as well in my watch list during December. So this is Euro GBP, and basically what happens on Euro GBP is on like different pairs like odd USD. In odd USD, your Asian ranges would be like 30 pips, 40 pips, and like 70 pips even. I was just backtesting odd USD, and what I saw was the Asian ranges were bigger than the London kill zones. So if you have Asian ranges bigger like more than 50 pips or 40 pips, then you need to change your pair or don't trade that particular pair on that day. So what happens on Euro GBP is the Asian ranges are very like way too small, so you have more potential to get entries on Euro GBP. That is why I have added it in my watch list. So as soon as I get to my charts, I will look for the sweeps that had already happened on pairs. Like this was the Asian highs that were swept over here, and I was looking for market structure shift and a fair value gap for entry. Okay, so this was the downward trend on lower time frame, I can say. So we have the market structure shift, and we have cleared the buy side liquidity, we have cleared everything above, right? But what happens over here is we do not have any fair value gap. The last fair value gap that we have is below the 0.50%. So this was the equilibrium, and the last fair value gap the fair value gap is below the equilibrium, so we won't be using that one, and this high will automatically become the liquidity point for us. So as this was the liquidity point, we will be waiting for this to be swept and then wait for our entries. Now after this size, we have this, lows that was broken over here, and we have a fair value gap for our entry. Now you are having issues with your stop loss, like to know what pair like how to use the stop loss on specific pairs. Like currently I am on Euro GBP, right? So I don't know if it respects my stop loss, if I put it above the fair value gap candle or below the fair value gap candle. So or the candle behind the fair value gap candle. So all of this you would know is when you backtest that specific pairs. So let's see, I have backtested like Euro USD, so I know that like 70 to 80% of the times Euro USD respects the stop loss if it is above the fair value gap candle or the candle before the fair value gap candle. So that is the reason that I use stop loss above the fair value gap candle. But currently in this scenario, we don't know if this pairs if this pair this Euro GBP except like if you put our stop loss like somewhere over here, right, like we normally used to do on Euro USD. So we know Euro USD respects that uh, stop loss. Like if we place our stop loss above the fair value gap candle, so we know that Euro USD respects it, right? So this is Euro GBP, and you don't know, and we don't know like if it respects it, if it respects it or not. So, but what we basically do is to put our stop loss if you have any order block or any high. Like if there was not any order block over here, what I would have done is put my stop loss over here, but we do have an order block over here. So this is why my where my stop loss is gonna be above the order block wick, right? Now after this entry, my target would be the as usual the 5 hour and the low of the Asian session. So this was the entry, it was 8 hour, and after that do we see any fair value gap and immediate reaction? So after this liquidity swept of lows of the Asian session, we don't have any immediate reaction, but this was the extreme fair value gap that was tagged like after 1 hour. So this was not the immediate reaction, but let's say it took a loss over here, and after that there was this BPR. It was not tagged on immediate basis, but this was if you took this as a fair value gap, so this was a reaction on the fair value gap, but we do like the market structure shift should have been over here because we do not have any lower high. So London kill zone stopped over here, right? Closed over here, right? So this was the low that we would be looking for price to sweep, and then look for buys above the London kill zone highs, right? So after this, what do we have? We have this build up that is known as trendline liquidity, right? And what do we look for? A fair value gap for our entries. This is your market structure shift as well. So this was the extreme fair value gap that you had, and this could have been your entry, this could have been your stop loss. As I said, you could have put your stop loss over here if this was your USD, but in this case our stop loss would be below the order block. So where should my first target be? The 5 hour, and my next target would be the London kill zone highs. So that basically turned out to be 10 from here including that loss and 8 from here. So I would suggest you guys to check Euro GBP if you don't find any entries on Euro USD or US30. Okay, so I've been backtesting this as well, and I will share the results of my backtesting of like previous 6 months as well. So I've been on charts from like 12 hours right now, and it's like 2 a.m. over here, and I'm currently still backtesting it, so I thought I should make a video on it as well. So this was the last video for the session cycle. If you have any questions, you can ask me in private, and then I'm gonna do the Zoom sessions on it privately, because what I see is mostly like majority of you have understand the concepts. The only reason for me for teaching this is that it includes every like concept from ICT. Like instead of doing one video on like power of 3, what power of 3 is: accumulation, manipulation and distribution. So in this scenario, let me show you what it is. Let's say, as all of you know that Forex market opens at 00, like this 12, this, right? So market opens over here, you have your accumulation, right? Accumulation means is like the price ranging, right? And this happens after the Asian session, because our Asian session closes at 00. Okay, after accumulation, what do we have? We have the manipulation, right? Let's take this as a buying days, right? And this is a daily candle. Okay, I'm showing you this as a daily candle. Now this is the manipulation where the big hedge funds and banks, they took out this sellers and all of the sell side liquidity, and they are buying below the, like they are buying below the retailers as well, because this is where the retailers would have been buying, right? This is their support. So they took out the retailers, and this is where they are buying. Okay, after they would put their orders over here, what they would do is, now this is known as distribution. What distribution is, this is your accumulation, right, inside a range. This is your manipulation, took out the liquidity, and this is your distribution, a huge move towards the opposite direction after the manipulation. So basically the target for your distribution would be the previous order block or fair value gap or like BPR and stuff. All of this is known as PD array. So if you look closely, this is how our session cycle works, right? Let's say you have your Asian session, you have this swept, and after this liquidity swept, you have your entries, and after the entry your target would have been the opposite side of the session. So this is how like same the session cycle works as well. So for your entries on this accumulation, manipulation, distribution, your entry should have been inside this manipulation zone. If you have any manipulation after the this range, like the ranging period, your entries would have been inside this manipulation zone, and your target would have been the previous uh, like fair value gaps or order blocks and stuff. So this is like a concept that we will use on lower time frames after if we use the 90-minute cycles. So this was the last video for this, and what I would suggest you guys is to backtest this as much as you can, because what we are doing is we are testing the 90-minute cycles, and what basically happens is the win rate is like alright, but not up to the mark. Like the win rate is not above 90, or I can say, or like 100%. But the risk to reward is not as much as we do have on the session cycles, because what I have seen is the risk to reward is basically 1:5 or 6, and we trade only in like during the after 1 hour of the New York kill zone, and we close at the 14. So basically we only trade for, let me count, 540, let's say. So we trade only for 8 hour in the market. So all of that consists of like only the New York session. So we will find like less entries than this, and our risk to reward would be pretty much messed up. So for that reason, I want you to focus on this first. So once we clear our doubts on this, I will teach you guys the 90-minute as well, and all of the concepts from ICT himself, like the power of three and the three drive pattern, and there are like couple of more. So this entry model, this is also known as Judah swing. If you don't have this Asian session, but if you took this buy side liquidity and you have this market structure shift fair value gap entry, this entry model is known as Judah swing. So this is what ICT teaches in his like majority of the videos, and in the 2022 mentorship. So this is known as turtle soup or Judah swing.